We go. Yo, what is up for everyone on the YouTube replay? Hope you're having a great day because we are having a surprisingly green day in the stock market. As we know, on Friday, we had the whole tariff fears, but then it got all de-escalated from a tweet. So the market is basically rallying big time off that news. The QQQ is up over exactly 2% today. Pretty much the whole watch list is green. S&P, Nvidia, Apple, Tesla. So let me give you a quick portfolio update. Then I'll show you some stocks that I just bought and what I'm watching to potentially buy more of. So yeah, here is our Robinhood portfolio. As y'all know, our Robinhood portfolio is known as our dividend only account. Hey, what up, Looney? What up, Plasma? What up, Prime? Hope y'all having a great day. Happy Monday. So yeah, we're up 1.99%. I did not expect this green. Our Roth IRA is barely up, only 0.26%. Inno data was green, but Inno data is trending slightly red. And I'm actually thinking of picking up another share of CorMedix down here, CRMD. It's a pretty cool stock that I like. So yeah, that's our Robinhood portfolio. We're up 2%. And then here is our Webull account. This is known as our risk on portfolio. In the top left, our open profit and loss. We're only up 19% all time. We've definitely underperformed, but yeah, hey, y'all seen Futu today? Futu's up 5. Power Solutions is up 13. Sprouts Farmers Market finally having its comeback day, up 3.7. Dave is up 4. T-Row's up 4. No way, our boring T-Row stock. That's like our high dividend play. What up, B-Mills? So yeah, what's red on the day? Of course, UiPath is red. I'm still investigating if UiPath has a moat. And then finally, here's what's crazy. Y'all ready for this? Our Mumu portfolio is up nearly $700 on the day. We're up 2.67%. These are all the stocks that we going in here. Comfort Systems is at an all-time high. Hit a new all-time high today, up nearly 5%. So our HVAC play just continues to climb higher. Powell Industries is up 4.3. Amphenol is up to a pretty much new all-time high or close to it. Can I see your Robinhood portfolio again? Just got here. Hey, yeah, by the way, if you missed anything, you can replay it and rewind it on the YouTube stream. So yeah, here's our Robinhood portfolio again. Yeah, we're up 2% on the day. Year to date, we're up 16% again. Hopefully no one sold on Friday with the tariff fears because I feel like it's just like April where we had a massive dip in April. You know, we were down 13%, but as long as you just didn't sell, like even if you didn't buy anything, as long as you just didn't sell, you're doing amazing. Hey, what up, Celebrate? What up, Catherine? Hope you're all having a great day. And hey, Kiva, what up, man? Buying more BITO and ETTY. I've never heard of ETTY. Let me check that one out. This is the Amplify Ethereum 3% monthly option income. Oh, sounds like some Ethereum covered call ETF, and BITO I know is a Bitcoin covered call ETF. So yeah, you know, Bitcoin is an asset where you get a lot of money whenever you sell calls on them. And basically, of course, as we know, this will just underperform Bitcoin, but you're not really buying this to outperform Bitcoin. You're buying this to maximize your dividend income. Because if you go to the dividend right here, you basically get exposure to Bitcoin with a 54% dividend yield. The yield changes, but basically however much income they make, they return to you. It has a 1% expense ratio, but yeah, you buy this to maximize your income. Hey, thanks, Plasma. Always love the streams. I appreciate you. So, B-Mill said, can we review ADUR? Let's do it. What is ADUR? This is ADUR Clean Technologies. Wow, hey, congrats if you own this one. You know, you got to be up on your position. It's still a small one. They're only worth $520 million, but let's go judge them off their financials because that's what matters. So if we go to their right now numbers, it doesn't look great. They're making, you know, $50K a quarter, and it's down 30% year over year. But they do have an insanely good balance sheet. Well, the assets are only $9 million, but is this a rare earth mineral play? Let me actually go check this out. Pollution and treatment control, manufacturing of oils and specialty chemicals using waste plastics. Well, hey, the momentum has been insane on this stock. I would just like to see more consistent numbers yet because I can't trust these numbers fully. So I don't know if I'd make that a meaningful size position. Did you see SFM went up? Yes, sir. Hey, we've been talking about Sprouts Farmers Market for a while. We're still down 20% on our position, but they're up 3.67% on the day, which is great news. Basically, this is a healthy grocery store. Hey, what up, Caden? Hope you're having a good day. And Aiden said ASTS. Remind me to look at ASTS. I want to look at that one. But for Sprouts Farmers Market and for grocery stores, you focus on the net margin because Kroger has a 2% net margin. Costco is like a 3%. target as like a 4. But yeah, they have abnormally high margins for this industry. That's because they sell more healthy oriented stuff, and I think consumers will pay more. And so, like, this is just a grocery grocery store, or a healthy grocery store. The sales are up 17, and the net income is up by 40. Again, because of that net margin expansion, net margins went from 5 to 6. So anyway, they also have no net debt, or actually like pretty much no debt at all. But the best part about this stock right here, the reason I buy them is because of the share buybacks. If you look in the bottom left, there's 98 million shares. So right now there's 98 million shares. If we just go to 2019 or 2020, in the year 2020, there was 118 million shares. So it went from 118 to under 100 million. So anyway, they've bought back, like 24% of the entire company just since COVID. Insane. So that's my grocery store play. Okay. What phone do you have? The second newest iPhone. It's brand new, just came out last week. Oh yeah, I saw that. What's this one? Wait, there was a stock I wanted to get to. What was it? Oh yeah, ASTS. Yeah, hey, so this is a space company, a huge momentum play. Wow, they're up 10% on the day. Basically, if you're a shareholder of this stock right here, you're really waiting for the next 6 months. So like buckle up, because if we look at the analyst expectations, right now they do $1 million in revenue a quarter, nothing. But next quarter, analysts are expecting 22 million, and then the quarter after 35 million. So watch out for the next 6 months. Let's hope they don't miss on these expectations, because, with all this momentum, thare really pricing in that future growth. But this is one of your space plays that's really transitioning from a revenue-less company to getting some real numbers. What do you trade on? Yeah. Hey, by the way, if you want to get this brokerage I'm on, it's in the link tree in my bio. The first link there. Thoughts on BlackRock and JP Morgan? JP Morgan. Ooh, speaking of BlackRock, actually, let's look at BlackRock, because I like them because of their ETF management business. They basically collect high margin management fees, and especially with their new alternatives crypto ETF, they're at an all-time high. They deserve to be at all-time high, especially with the market. It just makes sense. But yeah, here's BlackRock. If we go where the revenue comes from, 12% of it is now their alternatives. And if we look the past 3 quarters, it's up 71, up 81, up 63. The reason it's so growthy is because they just released their IBIT ETF, and it's just gone billions in AUM. And also they just released their Ethereum ETF, so that's going to add more to their alternatives revenue. They just make good net income. Like if we go to the net income down here, easily 1.7 or 1.6 billion in net income a quarter. And also you get a good yield. I like this as a dividend growth play, So you get a near 2% yield. I think they do some share buybacks too. So BlackRock's a cool one. So Plasma said ENVX. Let's do it here. So, I'll show you what I'm buying after this. Hey, what up? Brian, TRVD crashed 85%. Hey, so what up, aliens? So here's NMI. What's the market cap? So they're a $2.8 billion company. They still have a pretty decent market cap, but the stock has been flat since 2021. Let's see if we can figure out what happened here. So they sell a product. Product revenue looks a little choppy. Let's go over here to, just go to revenue. So it's not terrible. I mean, it's somewhat growthy, but it's still really small numbers, 5 to 9 mil. Oh, so this is the bad news. They're losing, 30 to 40 mil in net income a quarter. At least it's narrowing the past 3 quarters. The losses are narrowing. The sales are going up. I just don't know if this is worth $3 billion. Analysts are expecting 12 million in revenue, so that's at least good. 9 to 12 million. I think investors probably just wanted to see more growth here. Yeah, they're expected to lose net income, like still another 30 mil a quarter. I'd be a bit careful because they lose. Yeah, nothing's really blown me away there. Can you trade on your phone? Yeah, you can. What up, Christmas? So, what up, Looney? He said BFOR. What's this one here? I don't know if I've heard of this stock before. And Michael said DJ. Oh, hey, yeah, well, check out DJT. That's like it's kind of like a GameStop. You like buy them for their cash and their Bitcoin holdings. So BFOR, this is the Alps ETF Trust Barron's 400 ETF. So it's like instead of the S&P 500, it's like a 400 ETF. So let's see what it owns. Idaho Strategic Resources. Well, hey, that one's done amazing. Whoa. InnoData, no way. Hey, I own that one. InnoData, Vertiv, which is like a super microcomputer competitor. I mean, Stroke Holdings. I haven't heard, or Stroke Therapeutics. I haven't heard of some of these companies, but interesting. It looks like a mid cap play. What app is this? Yeah, hey, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the first link there. And full disclosure, it's an affiliate link. So if you deposit like $100, we'll both get like some free stocks. But yeah, if we go to the DJT account right here, and I don't really want to get into politics, but this isn't a great stock to buy. Ticker symbol DJT, I think. But because if you go to the revenue, you're not buying them for the core business. We go to revenue, 800,000 a quarter, not good, but you're really buying them for the balance sheet and you're right, Michael, the accumulated Bitcoin. That's what basically just happened to their balance sheet right here. They bought a bunch of Bitcoin with it. So yeah, there's the stock. So you pretty much value this one off the market cap of their Bitcoin, but I wouldn't trust a lot of money with that one just because it's, it's like almost like a micro strategy or something where they just trades off their Bitcoin value. Do you have a rank on the? I don't know what that is. No, I'm not. I don't. Could we see a gold sell-off? We could. Usually as we go into a recession, gold does good, but when we're actually in the recession, gold normally doesn't do great. But look at gold right now. I mean, this is a huge safe haven asset. As there's inflation, war fears, gold, investors flood to gold for the safety. So it's new all-time high. I mean, ever. So congrats if you own gold or gold chains, or maybe go hit up the pawn shop. David said pins. So it's actually in my zero debt watch list. Pinterest, I have a lot of companies in here like Instacart, DocuSign, Duolingo, Opera GX browser, Zoom, Reddit, Yelp. These are all debt-free companies. One of them on here is Pinterest. You won't believe this. They have no debt and so much cash. They literally make like 30 mil of interest on their cash a quarter. But here's Pinterest. Let's see. Oh, here's a cool metric. We get their monthly active users. So it's 578 million this quarter. So 578 when the same time last year it was 522. So they've grown their daily active users by like 45 million year over year. That's great. Check out the growth as well. Sales are up 16%. Net income, they're making about 30 mil in net income a quarter. Well, actually more. This one quarter, Q4 is when they make all their money, like Christmas time. But check this out. They have an absolute fortress of a balance sheet. Let's see how much cash they have. They have $2.66 billion of cash, no debt. And that $2.66 billion of cash literally earned them $28 million of pure interest this quarter. That goes straight to the bottom line, or they pay a little tax on it, but just goes straight to the bottom line. I mean, this is insane. They're making, they make every quarter basically 30 million of interest on their cash a quarter. That adds to the net income. Cash from operations looks great as well. Let's see the actual free cash flow number. Yeah, the FCF, which is free cash flow, they're making a couple $100 million a quarter, so they're not too shabby. The no debt takes a lot of risk off the table. I'm up over 100% on CEG. No way, Looney. Hey, let me check my CEG position. They had a great day today, right? Yeah, look at that. So we're up 1.95% of the day, and our largest holding in here is Constellation Energy. This is that nuclear utility play. Best nuclear play out there, best utility play, in my opinion, out there. They literally own 30% plus of all the nuclear reactors. Oh, someone said Qualcomm. Hey, let's do Qualcomm, actually. I haven't looked at that one in a while. I heard they're being like investigated for something. I don't remember. Let me actually just go to the news down here. AI news. Yeah, China's launches antitrust investigation into Qualcomm's Autotalks acquisition. Anyway, this is your smartphone chip play. I think they own like Snapdragon, if anyone's heard of that before. But honestly, this is a great dividend growth company. I'd recommend this one, not financial advice. Check this out. Even if you buy the stock right now, you get a 2.2% dividend yield, and they raise it every year. In 2020, you got paid $2.50. Now you get paid $3.30. So definitely a nice pay raise. And if we go to their multiple, they literally trade at 15 times net income. That's super industry cheap. Here's their smartphone chip market share. It's at 26%, down from 30. So their market share actually fell a little bit. Maybe that's why the multiple is compressing a little bit. But if we go to their net income down here, this looks fantastic. I mean, they're easily making pretty much 2.8 to 3 billion of net income a quarter. And since the dividend costs so little, they're doing insane share buybacks. Check this out. If we look at the net income is up by 25, but the net income per share is up by 29. They've literally bought back 4% of all the shares plus 2% share buybacks. So you get 6% shareholder yield plus a couple percent stock price appreciation. I mean, that should hopefully return or CAGR like 8 to 10% a year. Do you hold anything rare metal? Not really. Um, Maybe Amphenol is somewhat copper exposed, but not really. What apps you using? Yeah. Hey, by the way, all these brokerages, all these apps I'm using are all in the link tree in my bio. I have so many brokerages here. Yeah, I got my Webull account right here, but yeah, they're all affiliate links. Full disclosure. Yeah, if you want to get any of these apps, they're all in the link tree in my bio. Out of all three of these, this one is my favorite, most useful, lowest fee brokerage. It's in the link tree in my bio, the very first link there. Ooh, Medi said ARM. You know what's cool about ARM? Nvidia actually owns ARM, and I'm looking into starting a position in ARM just because their margins are insane. Because this is really a royalty play. If you didn't know, that's what a lot of people don't realize about ARM. They're actually a royalty business. Go to the revenue right here. Let's actually see when it broke this down. Yeah, so look at this. 58% of all their revenue is their royalty revenue. And then the other half of their business is their licensing revenue. So two high margin businesses. So if you go to their gross margin, I mean, this is insane. 97% gross margins. They're making a couple $100 million net income a quarter. Really good balance sheet, deleveraging. I mean, they're at the top of my watch list. Like, this is one I want to get exposure to eventually, but the multiple is like Palantir type expensive. They're really expensive, but they deserve the high premium just because they're so quality. So AMR, or Sezzle. Wait, AMR, this is your coal play. If you're looking for a coal stock, if you want exposure to coal, here's your company right here. The coal revenues, thermal coal. The coal was doing amazing back in 2022. Look at that. The sales were booming, but we kind of got back to it's not too popular to use coal just because of the pollution fears. And back then, the company was printing money. If we go back to this environment, this could be a multi-bagger, but I don't know if we will. They were making a couple $100 million a quarter, $500 million that one quarter, but as things normalized, now they've lost net income every quarter for the past 3 quarters. So I can kind of totally understand why they've seen this massive decline in stock price, just because they're losing money now. The growth is gone. So we want to see that growth come back. So Marcus, what up, dude? He said SoFi stock. Heck yeah, dude. I love SoFi. I do own them. Actually, maybe I'll pull them up here in a second. XCH guys. Hey, is that a stock right there? Can you go over Powell? Why are their margins so low? Powell actually has good margins, expanding margins. But we'll actually check that out right there in a minute. Here's SoFi Technologies. This is, your fintech play. I do own them, so I might be biased. But here's why. This isn't a stock propped up on momentum. You look at Qubits, you look at Oklo, you look at uranium plays. A lot of them are just propped up on momentum. They have no fundamentals. You're buying an idea. But this is a company where they have real numbers and real growth. If we go to their financial services revenue, this is what makes me trust this rally. That is not just going to, evaporate all gains. I mean, this is impressive. Not even the analysts expected this. Check this out. The revenue's up 105, after it grew 80, after it grew 222, after it grew another 80. So it just hits a new record every year, every quarter. The analysts weren't expecting that growth. We can see the analyst expectations right here. The orange lines, what the analysts expect. Huge beat on revenue every quarter. They beat on net income every quarter and on EBITDA by a huge margin. So no wonder every time they report earnings, the stock gaps up so much, because they reported way better numbers than the analysts expected. So I just think people are really taking SoFi serious. They did 850 mil of revenue. Out of that, 97 million of it was after tax net income. So SoFi is a beast. American Airlines, hey, that's not a good stock there. I hate the airlines. There's not an airline out there that even comes close to keeping up with the S&P. But a stock I want to talk about now is Powell Industries. So this is your electrical infrastructure play. Oh yeah, there's Eaton. Eaton is probably like the safer mega cap version. As you can see, the stocks rhyme together somewhat. But Powell Industries is my new favorite growth play. They have no debt at all, completely debt-free company. And someone said, wait, can you go over Powell? Why are their margins so low? I mean, this isn't super low margins, and actually, historically, for the company, these are insane margins, because let's scroll back out a couple years. Look at them back here. This is choppy, tough business to buy. Single digit margins, choppy numbers, but now they have some consistent double digit 15% net margins, and every quarter the net margin grows higher than what it was the previous year. And again, when there's margin expansion, there's net income growth. I mean, if we look at the sales, here's the crazy part. Actually, the sales are down year over year. Sales are down 0.6. but the net income is up by 4. Their profits are up by 4 because of the net margin expansion. Here's the crazy part about Powell Industries that I go over in my videos about them. So first off, they have no debt at all, completely debt-free company, and their dividend, they have a dividend, and the dividend only costs $3 million a quarter. So the dividend costs $3 million a quarter, and they have $433 million of cash. That $433 million of cash is mostly in 1 to 3 week treasury, so that actually earns them in pure interest. It made them $4 million of interest this quarter. They literally made $4 million of interest on their cash, which more than covers the cost of the dividend. So that they basically pay a dividend for free. They make more interest than the cost of the dividend, which is nuts. Anyway, and their growth, and the PE is still fair. I mean, if we go to the net income multiple, which is PE, they're trading at 21 times PE. They've done a little bit of share buyback. So that's why I own this company. When I buy, remember, they have $433 million of cash and no debt. They have a $3.79 billion market cap. So over 10% of the market cap is just cash. You can do an X cash PE multiple. They're trading at like less than 20x net income. Okay, what's this app? Is this app free? Yeah, hey, this app is free. Well, actually, this is a brokerage. It's where you buy stocks on. It is free to like analyze stocks on, but if you go and deposit $100, we'll both get some free stocks. I don't know if every feature it lets you do. Okay, so Rocket Lab. Hey, what up? Kevin said CHNR, please. Let's do it. CHNR. China. I don't love the. Okay, we're actually not going to cover this company. Sorry, Kevin. Because if you look in the top right, I mean, we just don't really cover these kind of stocks. Their whole company is worth $8 million. Like the whole company is worth $8 million. So that's so speculative. We won't even. Sidekey said, Lyft, please. Let's do Lyft. Heck yeah. And Tommy 1, shout out to him. What's up, man? Which one? No debt. Oh, that was Powell Industries, POWL, with no debt. Okay, so here's Lyft right here. You know, your Uber competitor, kind of. I don't know if Lyft does like food deliveries. Like, I think they only do ride sharing. I don't know if they do food deliveries. Let's see, is there any news? Lyft partners with Tensor Auto for robo-taxi fleet development. Pretty cool. What's cool about this one is like they're finally buyable. Like if we zoom out on their net income, they used to burn through net income every quarter, you know, a lot of it, a couple $100 million a quarter, but then they finally started narrowing their losses. And now, great news, for the past 3-4 quarters, they're actually making net income every quarter. So it's finally a profitable company. Same with FCF. If we go to the free cash flow, they're printing a couple $100 million of free cash flow. It's growing very nicely. They're finally a decent buy, I think. I love Uber as well. They did miss on their revenue growth expectations this quarter. Yeah, I do. I love the business model. I actually probably like Uber stock more, although it's probably a lot more expensive. I'd maybe rather just pay the premium and buy Uber stock over it because I love the food delivery business. And I love DoorDash is a cool one too. Okay. JPM reports early tomorrow. I got in. Oh, hey, we won't really cover JP Morgan because if you buy it now, you're basically betting on earnings. But here's what's so impressive about JP Morgan, you know, too big to fail. I love their yield. Even if you buy the stock right now, you get a 1.7% dividend yield. Not too shabby. What up? Yeah, hey, by the way, hey, Loggy, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. By the way, this is a brokerage. It's where you buy stocks on. Full disclosure, it's an affiliate link. So if you go and deposit $100, we'll both get some free stocks. Ooh, Instacart stock. What up, Kool-Aid? Actually, Instacart, they're on my zero debt watch list right here. Every stock in here has no debt, you know. Here's Maple Bear, which is Instacart stock. And one reason, if we go back to here, the reason they gapped down on this day was because this is the big worry. It's the fact that Amazon might eat their lunch. So Amazon announced, this is the whole reason the stock, there was no earnings this day. The stock fell in the Amazon news. Amazon is now expanding in over 1,000 cities, same day grocery delivery. So basically, Amazon does what Instacart does now, and you don't want Amazon as your competition. So, you know, the moat is slowly being, you know, eroded, or, you know, competition's entering. But I love this one because, again, they have no debt. Let me see the expectations. Wow. They're expecting probably one day going to be doing $1 billion of revenue a quarter. How much net income off that? What's their net margin? What do they bring to the bottom line? So they actually bring good double-digit net income to the bottom line. Wow. So, yeah, they're making a couple, you know, easily $100 million plus of net income a quarter. Of course, really good balance sheet, no net debt. Or no debt. So anyway, they're actually interesting. What's the multiple? So they're trading at 22 times net income. That's actually really cheap. They're trading at actually a fair, I like them. I bought VOO. Hope everyone is doing well. Hey, what up, Trust? Yo, that's a great idea. Just buy VOO and chill. So Tommy said waste management. Yo, then we'll kind of go through these faster. I'm a little behind on chat. I'm so sorry. We'll try to do Fiat. What up, Toomey? What up, Jordan? Yeah, we'll get to FIAT. Don't worry. And HESM. Yeah, that's a cool one too. What do you think of Shark? Hey, user 39. I saw that one. Sorry. What is Shark? Are you talking about Shark Ninja, the blender company? Maybe we'll check them out. But here's waste management. This is a business model I'm such a fan of, and they're on my never sell watch list because I eventually would love to get into waste management as part of my never sell portfolio. I mean, people always need trash. It's a business that's not going anywhere. Even Bill Gates knows that. Bill Gates owns the Bill and Melinda Gates Foundation owns 8% of all the shares. So that's pretty interesting. He sees some value, and look at this net income right here. I mean, they're easily making 700 million a quarter. I mean, AI can't really come for this company, right? I mean, you almost trust waste management more than a Microsoft, or I know, well, not that, but you know what I mean? It's a safe bet. I mean, you don't have to, you can sleep well at night knowing your waste management shares are going to be safe. And in the meantime, while you just hold forever, you get paid 1.5% of your money back every year at an inflation beating rate. They raise their dividend every year. So waste management is absolutely one I'd recommend to never sell. So let's do Fiat right here. FIAT. I didn't get to that one. This is the yield max short coin option income. So yikes, it's at an all-time low. So this was created in 2024. It IPO'd at $20. Now it's $2. So it's fallen a nasty percentage. You buy this to maximize your income. The yield's probably going to look wow. Let's see what the yield is. So if you look at the yield, it says a 280% dividend yield. That's completely not true, because whenever the stock price goes down, it makes the yield artificially go higher. And this is what's the expense ratio? A 1% expense ratio. This one is one of the worst, probably, return of capital ETFs. I'd have to go and look in their past of their distributions, but whenever they return capital to you, it literally makes the stock price of the ETF plummet. And it makes the future income plummet. So your incomes, I wouldn't trust this one. I probably would expect this to just continue to go lower and lower, but you got to focus on total return. I'd just be so careful with that. I wouldn't trust it too much. Henrik said HESM. Oh, let's see. Hey, shout out to Tommy. He said, thanks, bro. After your stream, respond back to my message. Hey, yeah, Tommy, sorry. I wasn't able to get back to your message. Hey, shout out to Tommy right here. I've been at college all day, and I pretty much just got back home an hour ago. So I appreciate you, man. I'll definitely get back to that. But here's Hess Midstream. This is one of the higher yielding oil and gas plays that has in my opinion, sustainable dividend. If we go to the dividend, it says 8.5% yield. That's insane. So you get a really nice dividend. But one reason the stock is tanking is because they basically have these oil pipelines. And they have these oil pipelines, and specifically their main pipeline, it used to have three different oil rigs used to use their pipeline. Now, only 2 oil rigs are going to be using their pipeline. And that's why the stock tanked on this day. There was no earnings report. They just announced that news. So that's the reason why the sentiment's a little bad. So that means the future growth might, that's kind of the fear. The future growth is going to be slightly lower because they don't have that extra customer. But I mean, the business prints money. I mean, look at that, 160, 180 mil in net income a quarter. What's the dividend cost? Let's see. The dividend cost, look at that. The dividend only cost 83 million. So the dividend cost 83 million. They could easily afford that with their net income. So there's Hess Midstream. And they don't give you a K1 tax form as well. That's what's so cool about them. So Dot said Nvidia. Yeah, let's do Nvidia. Oh, we got to get to Rocket Lab, and I want to get to Reddit. Please remind me to get to Reddit and Rocket Lab. I definitely want to get to these. All in the VT ETF. Yeah, Mohammed. I love the Vanguard Total Stock Market ETF. Ooh, Lauren said Monster. Hey, Lawrence, don't worry, we'll get to MNST as well. Appreciate you being here. So here's Nvidia. This stock is it's at an all-time high pretty much. So congrats if you own them. The largest semiconductor chip play out there. Look at that dividend, a 0.02, but only a 1% payout ratio. So, but here's, obviously we know they have a huge GPU market share, a 24% PC GPU market share, up from 20%. you know, data centers need GPUs, and basically their main customers have been all the cash-rich companies. So Nvidia has insane pricing power. Their net margins of 56%. They're selling chips to, Microsoft, Google, Amazon, Meta, Oracle, OpenAI, all these super cash-rich companies that will pay the premium because they need to be the first to the AI race. And check this out. If you go to the revenue's up 55%. The revenue is $46 billion. Out of this $46 billion of revenue, $26 billion of it was after tax net income. Again, that insane 56% net margin. So if you go buy an Nvidia chip for $100, well, per $100, well, basically $56 of that is after tax net income for Nvidia. I mean, the EPS is expected to keep on climbing. So Nvidia is a beast. But here's the thing. The law of large numbers is a bit what worries me here to make. Like, if you want to double your money on a stock, like everyone wants to double their money, I think this one's a hard double because if you look in the top right, the market cap, it's a $4.5 trillion company. So you buy Nvidia right now. Let me just go to the market cap. You buy Nvidia right now for at their current price, that means they're worth $4.56 trillion. For you to double your money, they have to be worth over $9 trillion. So that's why my semiconductor play, I actually decided to pick up AMD stock just because I think it'll be an easier double because AMD is only worth $350 billion. They've underperformed Nvidia for sure, but they're catching up a little bit, especially with their new OpenAI news. The stock gapped up. So that's my semiconductor play. I still love Nvidia. Nvidia also, to kind of counteract that, Nvidia is so big. Nvidia is so big that they literally own some individual companies. We go to the Nvidia portfolio right here. They own a huge chunk of CoreWeave, of APLD, ARM, Nebius. So Nvidia owns some individual stocks. Monster Beverage. This is a monster of a performer. Who knew? Selling cans of energy drinks would lead to a stock price doing this. What happens is, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. Hey, Young Zell, U4. Hey, thanks so much for the rose there. I appreciate that. So here's Monster Beverage. This is a huge buyback play. One of the reasons Monster Beverage has done so good is because of the share buybacks. If you go to the net income, check this out. Here's what I mean. The net income is up by 14, all right? Net income is up by 14, but the net income per share is up by 21. Again, the EPS growth and the net income growth should always be the exact same. The only thing that changes for the difference of these numbers is if they do any share buybacks or dilution. And the share part of the ratio went down by literally 7%. This company's bought back 7% of all the shares. That makes the EPS go up, makes the PE ratio go down, gives you more ownership in the company. So they can, of course, easily afford to do these buybacks because they're printing $400 million a quarter. And they have no debt. So Monster Beverage is a beast of a company. I own their bottler. I own a Coca-Cola Consolidated. They bottle for Monster Beverage. If you didn't know, Coca-Cola is the large. Actually, let me just say that. If we go back to Monster Beverage right here, did you know this? We go to Monster Beverage and go to shareholders. Coca-Cola is the largest shareholder. They own 21% of the entire company. So if you own Coca-Cola shares, you technically own a little bit of Monster. Hey, Gym Therapy, what up, dude? Doing great, especially with this Super Green Day. How are y'all doing? So Laughing said Upstart. Hey, again, shout out to Tommy1 for the $5 super chat. So Upstart, this is your AI vehicle, loan company. So they do auto loans and stuff like that, but the growth is back. Here's what's kind of odd. I actually don't know don't know why the stock is trending down. Maybe it's just because I don't know. I don't know, but if we go to the revenue right here, the revenue's been really growthy. The revenue's up 101% year over year. That's insane. The revenue's doubled. That's mainly from their platform and referral fees. That's, up 105% year over year. And they're finally net income positive. Like this is a turning point. Like they used to burn, this is bad. They used to lose 30, 40 mil a quarter. Well, now they actually made net income this quarter. And let's see, are analysts expecting them? Yeah, analysts are expecting them to continue to make EPS or stay net income positive for the rest of the time. 20 cents of EPS. Wow. So actually the future growth is good here. Maybe look into them. I don't know. Not financial advice, but car credit services for cars. Maybe as we go into a lower rate environment, people will refinance the loans, or maybe they'll not need loans more. I don't really know. Hey, try not to spam there. Hey, we'll try and get to Merck. Come on. All right. There's a few stocks I want to get to. Ubisoft. Hey, Tree, is there a ticker symbol for Ubisoft? I've never heard of them. But sometimes I take a chance. Brian said I normally buy long-term sensible stocks, but sometimes I take a chance on speculative. I do the same thing, but you never want to have them as meaningful size positions. If we go over here to my, I call this my risk on portfolio. These are kind of like some stocks that I deem I want exposure to, but not big positions, like Supermicro, PSIX, Clear Secure, T-Row. Like these are cool, Axon, these are cool companies, but I don't want them as meaningful size positions. How are my stocks doing today? Futu's up 5. Yeah, PSIX is up 12% today. What's down though? Progressive is down. Oh, UiPath went green. No way, bro. UiPath, did they just they must have just rocketed up out of nowhere. Yeah. Whoa. Sprouts Farmers Market. Hey, we looked at Sprouts Farmers Market a minute ago. If you give me a little bit, we'll look at Sprouts Farmers Market again. I was just talking about them because Sprouts Farmers Market is up on the day. Finally, where is that one? Oh, I just lost it. Let me search by this. Okay, Sprouts Farmers Market is up 3.57% on the day. This is my grocery store play. I like them because of their abnormally high margins. For a grocery store, like they have 6-7% margins. But actually, the best part about them, they have no debt at all. So this company's making $100 million plus a net income a quarter. They have no debt. So what is Sprouts Farmers Market doing with all their money? This is why I bought them. You ready? The share buybacks. If you look in the bottom left, there's 98 million shares that exist. If you go to 2020, there's 118 million. So the shares went from 118 million to 98 million. They've bought back, 20% plus of the entire company. I love shareholder-friendly stocks. Since they have no dividend, they return it to you via share buybacks. Delta said, what's about Ton? Wait, is that a stock? TON? I can't find that company unless you're talking about this Australian company called Triton Metals that's worth 12 million. Hopefully you're not talking about, we don't really cover those kind of stocks, only worth 12 million. I miss what they trade under. Hey, Michael, you are able to rewind the stream. I apologize there. I don't know what I was talking about there because oh no. But hey, yeah, if you miss anything, you are able to rewind the stream on YouTube. Is this Mumu? Yeah, hey, TEBL, this is Mumu. Yeah, hey, by the way, if you want to get this brokerage I'm on, it's where you buy stocks on. It's in the link tree in my bio, first link there. Let's see. What is this one? Is Reddit a good stock to own? I actually do own Reddit, and I do own them, so I do think so. I'm taking a sip of my Celsius here. Dude, this Celsius, I kid you not. Oh, I don't even know if I could say that. It tastes like hand sanitizer, and it's sanitizer free. Okay, well, here's Reddit right here. This stock, I love this company. If you forget the name Reddit on this company, forget the name Reddit. Let's judge them off their financials the way we would any other company. And when we do that, I mean, this stock deserves to be at all-time highs right now. This is impressive. No analyst expected this. If we look at the revenue's up 77% after it grew 53, after it grew 23. Like, they're on a streak. Not only are they making revenue, but they're making after-tax GAAP net income. Go to the net income, record 90 million net income. That was a huge beat. Net income is just EPS, and analysts expected 18 cents of EPS. They reported 45. An insane, like this quarter specifically, I'm talking was an absolute gangbuster, amazing earnings. Their ARPU, their average revenue per user, is up 48% year over year. So look, huge beat on revenue. They expected 420. They reported 499. Huge beat on net income. Huge beat on EBITDA. They're triple beating on every metric. We look at the FCF. FCF stands for free cash flow. If it would load, well, I'll just point this out. They have no debt. I mean, this is the balance sheet you want to see for a company. Literally no debt at all on Reddit. And yeah, here's the FCF, which is free cash flow. It's up 4x year over year. So anyway, this is the kind of stock that I love, and I do own them, so I might be biased, but yeah, hey, Jonas and a few others said what app is this? Hey, by the way, if you want to get this app I'm on, by the way, it's a brokerage. It's where you buy stocks on. It's in the link tree in my bio, the first link there. And full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get like some free stocks. Sprouts is a safe play. Yeah, I agree, Omni. Why don't you want large positions in SoFi and Hood? Do you think they're good long term? Yeah, I do love them long term, but the valuations are too high to make them big positions. But I do own SoFi and Robinhood. And they were really big positions, but sadly I sold them. UBI. What? Someone said, can you do Psycho? Hey, or Zach, can you give me the ticker symbol? I don't know what that is right there, and I'll check it out for you. So hey, thanks, Looney. He says Ubisoft is actually ticker symbol UBSFY. Yeah, hey, thanks for that. So yeah, this isn't it must be a Japanese company, or let's go check them out. And sadly, they're at an all-time low. They're a 1.4. Wow, they're not worth much. Oh, they're a European company, so we'll convert the currency from euros to USD. Edition, production, cloud gaming, publishing. Let's see what the revenue is. Yeah, what games do they own? Actually, I'll go check it out after this. But yeah, the sales aren't too growthy. Again, they report in halves because they're EU, but the revenue's down 16% year over year. Net income is negative the past couple quarters. Dividend. Well, let's see what they own again. So they're headquartered in France. Video games, educational. Well, they're not saying the games they own. Anyway, I'm not loving those numbers. I can see why they're kind of at all-time lows right now. Someone said, why do you have Coca-Cola and Ferrari? You trade like Buffett. Hey, I'll take that as a compliment, but I own those companies because I like their numbers. I trust my my money with them. Actually, let me pull this up real quick. Actually, I think there we go. My phone just disconnected. Oops. But yeah, check this out right here. Ferrari stock, I am down bad on them. Look at that. We bought them basically yesterday and we're already down 7% on our position. So we kind of want to see, well, actually, I'm being super patient with my Ferrari position. I'm waiting like till it falls another 10% to maybe even add more. But yeah, I actually don't own Coca-Cola. I actually own Coca-Cola Consolidated. So if we look, the normal Coca-Cola stock, as we know, is ticker symbol KO. This is the one Buffett owns. So Buffett actually doesn't own Coca-Cola Consolidated. You can see the huge difference in the two share prices. Coca-Cola is on the bottom. Coca-Cola Consolidated, the bottler is on the top there. So yeah. Okay, let's see here. Hey, what up, Larry? Good to see you again. Ubisoft owns Rainbow Six, and they can't fix their terrible. That's funny, bro. Hey, I used to play Rainbow Six, not for much long. Rory said BULL. Hey, I actually do use Webull. Check this out. If we go, here's my Webull portfolio. So I've probably given Webull a bunch of different or a bunch of transaction fees. But yeah, here's Webull stock publicly traded. Ticker symbol BULL. They just IPO'd, and I like them for the growth. If we go to the revenue, this is great news. The revenue's up 46% year over year, but they are still struggling to make some consistent net income. You know, they made net income these 2 quarters, but then they lost net income. So we want to see them make more consistent net income. But one really bullish thing that I like about Webull is the fact that they just added crypto back to the platform. Like you can now buy crypto again on Webull, and I think that'll be a nice earnings tailwind to add to some more growth. Because again, they don't make much money, and same with Robinhood. That's why Robinhood stock has blown up recently from their crypto transaction and prediction market fees. But they don't make much money whenever you buy and sell a stock. They make a lot of money whenever you buy and sell crypto or the prediction market stuff. Why do you use multiple brokerages? Yeah, hey, I just don't mind it. There's no burden of having multiple brokerages. Yeah, I have a Robinhood account. Wow, every stock is green on the day in our Robinhood portfolio. Let's go. How's the Qs doing? Qs are up 2.2. Nvidia's up 2.6. Whoa, look at Tesla. Hey, I don't love this name, but congrats if you're in that one. That one's rocking it up higher, up 5.5. So yeah, our main account's up 2.24. Is that an all-time high? I think we're pretty close. That might be an all-time high. But okay. Can you do Psycho Epson? Yeah, hey, Zach, what's that? I don't know what that is. If you give me a ticker symbol, I can probably find it for you. 3.85% of your sitting USD, really good. 0.5% better than my platform. Oh, yeah, hey, you're talking about the APY on the middle of my screen. Yeah, that's what a lot of people love about this brokerage as well. Like if you go to Robinhood right here, with Robinhood, you get you get a 4.2. Oh, you don't even get that actually. You have to unlock that. They force you to do something. So yeah, look at this. You get a 3.75% APY with Robinhood, but you get a 3.75% APY with Robinhood, but you have to pay them $5 a month. That's what I don't love about Robinhood. But on this brokerage right here, you get a 3.85% APY, and there is no fees. There is no $5 a month. There's no commission. So that's what I love about this brokerage right here. By the way, if you want to get this brokerage, it's in the link tree in my bio, the first link there. Yeah, hey, oh, dude, hey, try not to spam there. We'll try and get to Qubits. I know Qubits is seeing a lot of momentum right now, but yeah, hey, I'm trying to spam there. That's not cool. Blaze said UPS, and hey, shout out to Papa Dan 33 for the rose. I appreciate that. Oh, hey, we got to get to SoFi. Hey, what up, Winwith? I do want to get to SoFi and Ninja. Oh yeah, hey, user 3. What's that Shark Ninja ticker symbol? I don't know. Well, remind me that one, and we'll try and get to them. Can you let me know what you think about buybacks on ENVA. Oh, we already looked at them, Accelerate. Maybe we'll get back to them. But here's UPS right here. This is, I think, a slight dividend trap. I wouldn't trust this one. A lot of people look at this and see, wow, you get a 7.85% dividend yield. It's basically 7.85% of your money back a year just in dividends, But here's the thing. You got to look at total return. Yeah, you get the 8% yield, but you're losing more than 8% in stock price a year. That's because they actually can't afford the dividend. Here's what I mean. And they just lost their growth. Their average daily parcel volume's down like 6% year over year. If we just go to their total revenue, the sales, the lifeblood of the company, the revenue's down 2.75%. That's not great. At inflation, that's super not great. So the sales is negative. So revenue's down 2.7, but the net income is down by 9. So a lot of people are like, hey, they still made net income. They still made 1.28 billion in net income. Here's why. Even though they made 1.28 billion in net income, they actually lost net income. Because remember, they pay a dividend. So they made 1.28. Remember that. They made 1.28 billion. And the dividend cost exactly 1.35. I just like digging right into the numbers. I mean, this is it's hard to trust this. I mean, they lost 1.3, or the dividend cost 1.35 billion every quarter. They couldn't afford the dividend this quarter. They couldn't afford the dividend last quarter either. So they actually have to take on debt or use money saved up from their cash pile to pay off their pay off the debt. So I would not buy that one. Not financial advice. I mean, negative growth year over year, negative margins, negative average daily parcel volume, can't afford the dividend. I think the only reason people like that one and want to get into it is for that dividend, but I think it's at risk. Hopefully that was helpful. I think a better play, if you just like that, if you like UPS for the industry, I love the packaging, shipping business, get Amazon. I mean, obviously not a pure play, but I mean, UPS is being out innovated by Amazon. Okay, so sorry, I kind of ranted there. Jake said, I took a hit against XBIO. I want to know if it'll bounce. So, yeah, hey, these are your momentum plays, or what's the market cap? Yeah, we probably won't even cover this one. If you look at the top right, they're only worth $8 million. Like that market cap this is pure speculation. I mean, $8 million market cap, and they lose $1 million a quarter. The sales are down 20%. I mean, yeah, you're buying this to probably swing trade. You have a plan to get out of this one. I hope you get a bounce or something, but yeah, I would try and get 8 million market cap. That's rough. So Evan said Navitas thoughts. I don't love Navitas. Actually, we won't cover them. The only reason this stock is oh, wow. They're at a new all-time high, or 52-week high today. They're being saved basically by Nvidia. Nvidia doesn't want them to go bankrupt because if Nvidia didn't intervene and basically save them, the stock would be at zero right now. Before today, the stock was at before that Nvidia partnership, the stock was at an all-time low. That's because their numbers are terrible. If we judge them off their right now numbers, the company looks terrible. But again, you're paying for that future maybe expectation. What is the expectations? Let's see. Oh, wow. So revenue is expected to decline from 17 mil to 10 mil. They're losing 40 mil, 50 mil a quarter. At least they have a decent balance sheet. And I think it's going to get better too, because I think Nvidia gave them some money. But nothing's blowing me away here. You're buying them for the momentum. And I am curious to see what Nvidia will hopefully do. But yeah, there's your small semi play. So, question mark said thoughts on Main Street Capital. Yeah. This is your BDC, business development company play. And these kind of stocks, these BDCs, you buy them for the income. Because if you go to the dividend right here, you get a 7.4% dividend. This does include the special dividends. When you exclude the special dividends, they have like a 5.5% yield. But what's cool about this one specifically is the fact that they pay monthly dividends, and the fact that they're by law, there's a rule that literally by law, they have to pay out 90% of their taxable income in the form of a dividend. So that's why the yield is abnormally high. But the normally high yield is actually sustainable because of how they're taxed. And also, whenever you receive these dividends, they're taxed not like your average dividend. They're actually taxed as short-term capital gains. So I do own them. Hold on, I'll just show you that. Let's see. Roth IRA. Our Roth IRA is not doing too well today. Yeah, InnoData is down too. But yeah, we do own 12 shares of Main Street Capital. And we're down 5% on them. You could get in at a lower cost basis than me. And yeah, there's our monthly dividend. So yeah, because we own 12 shares, they pay you 25 cents a month. I basically get over $3 a month in dividends. And since this is my Roth IRA, I can basically get paid $3 a month tax-free for the rest of my life, assuming they don't cut the dividend or anything. So yeah, there's Main Street Capital. That's your income play. Here's our main. This is actually, if you like dividends, these won't probably attract you too much, but this is my dividend only portfolio. Every stock in here pays a dividend. Even Meta, Google, these are more dividend growth companies, but they do pay a dividend. Google, Meta, United Rentals, McDonald's. Look, there's a lot of great today. I did not expect this. Happy Monday, everyone. I mean, with the tariffs on Friday, I thought we were not even halfway through this dip. Okay, anything to do with AI, robotics, new craze over the next couple of years? Yeah. Hey, what up, Scion? What up, dude? Said, RGTI. Yeah, here's your quantum names. These quantum names have been on fire. Did you sold? How's your portfolio doing? Yeah, hey, Bogdan, I sold DocuSign. My portfolio is doing amazing today, but I haven't. I sold DocuSign a couple days ago. I've made no sells today. I've actually did no buying or selling today. I've kind of just watched the market. I haven't bought or sold anything, but last week I sold DocuSign and bought Ferrari. But anyway, here's Riggedy Computing. This is your quantum momentum play. I mean, same with qubits. Let's see. Riggedy achieves 99.5 fidelity. I don't know what that. Reports strong cash position of $570 million of cash, probably from issuing shares. Here's how you can tell if you go to the cash and financing activity. If this is positive, that means they're issuing shares, and the debt is flat, so that means they didn't issue debt. If this is positive, they issued debt or shares, and they diluted you by $400 million, which was genius. I'm actually applaud that because they know the stock is overvalued, and they're taking advantage of that. They could have got 20% more money, or actually probably like 50% more money if they waited, but here's why I can't trust this one. Again, have a plan to get out of this one. I would, but here's the revenue. I mean, if we judge them off their numbers, the numbers are terrible. Again, this is a pure momentum play, and you don't really look at the numbers. But if we look at their financials, I mean, they did $1 million of revenue this quarter, and the revenue is down 42% year over year. So terrible revenues, losing 20 million net income a quarter. But look at this fortress balance sheet again. How did they get this? How did their balance sheet just rocket up with $1 million of sales and losing net income every quarter? Again, it was because they diluted you by 400 million, and that's honestly the cool thing. That's actually why of all the quantum names, I actually like IONQ the most, because IONQ just did something genius. It's still ridiculously overvalued, and I won't even touch it anywhere near where it is today. But basically, just a few days ago, is like around this time or a week ago, they diluted the shareholder by $1 billion. Okay, they diluted you by $1 billion, but then they bought a company for $1 billion. IONQ acquires Vector Atomic to enhance quantum sensing. IONQ is actually acquiring businesses. RGTI has no revenue, that one does. Hey, what up, Matt? Can you look at JP Morgan? Hey, we already looked at JP Morgan. Yeah, hey, sorry, Matt. I do try and get to all the things in the chat here. Let's see. What about WorldCoin? What is WorldCoin? Hey, is there a ticker symbol for that? When does market cap change? Or what do you mean, Looney? What's up? Yobeli said HYMC. The YMCA stock? Why? Okay. This is this looks like a rare earth mineral play. All the rare earth mineral stocks have been rocketing up. They have Highcroft Mining Company. Let's see. They own their Highcroft Mine. They're a gold company. So yeah, they're pretty much just following whatever gold does. I've seen a lot of gold mining companies out there. I don't love this one. Yeah, that's a bad balance sheet too. So not a great balance sheet, more liabilities than assets. Sales are down 52%. Actually, here's my favorite gold play. If you want exposure to gold with the yield, if you just buy physical gold, you don't really get a yield on it, and if you buy physical gold, you got to pay for storage. And, when you buy it, you pay a spot fee. And when you sell it, you pay a spot fee. And you could just buy a gold stock. Then this is actually Royal Gold. It's actually a royalty gold company. They buy these mines in the basically royalty stream rights, and they print money. They have would I rather buy that gold company or this one? Or probably buy this one. I mean, the net income is easily over 100 mil a quarter. If we go to their gross margins are 72%, net margins are 63. I mean, that's insane net margins. That's actually a lot higher net margin than Nvidia has right now. A 63% net margin. Again, that's because they're a royalty type company. And look at this freaking fortress of a balance sheet. That other stock we looked at had more liabilities than assets. Well, this one actually has no liabilities, no debt. And 250, look at that cash, went from 75 to 250 mil. Anyway, hopefully that was helpful. And a near 1% dividend. Not too shabby. So CoreWeave, let's do CoreWeave stocks. So CoreWeave, that's in the Nvidia portfolio. Yeah, hey, we'll look at METC after this. And does Progressive Corp benefit from interest rate cuts? I don't think so. Like, not directly. Maybe. I mean, actually, maybe it'll benefit because maybe if rates are lower, people will buy cars more and will maybe have more to spend on car insurance. Or I don't know. So but let's look at Corey right here. Oh yeah, we'll try and get to PayPal too. PayPal's a huge buyback play. Oh yeah, we do want to go over SoFi as well. We already went over SoFi a while ago, but I want to look at them again. Oh hey, don't worry, we're going to be streaming for another hour at least. So let's keep going here. By the way, if you want to hit the follow button, we stream every single day. I sell nothing. I have no course book, WhatsApp, Telegram. Please watch out for people impersonating me. I'll never follow you or DM you. But yeah, let's actually see what the AI news is down here. Oh wow, CoreWeave. Oh yeah, they're going to buy CoreZ, the Bitcoin mining company. CoreWeave acquires Monolith AI to enhance industrial AI solutions. Looks like they're doing some nice acquisitions of CoreZ, but I love them for the growth. This is a pure growth company at this point. I mean, the sales went from 400 mil to 1.2 billion. So this was a record, 1.2 billion in revenue. But look at what analysts expect in 2 quarters, 1.79 billion in revenue. I mean, the revenue is expected to just continue to climb higher. You are still losing a couple hundred mil in net income a quarter, but analysts expect them to lose a couple hundred mil a quarter. So it's not like, so actually I do like this one. I do like them. The valuation is probably a little high here, but I like their growth. I don't love that they lose a lot of net income. So actually, speaking of Nvidia, Bob said APLD. That's another stock in the Nvidia portfolio. Oh, I'm going to forget all these stocks right here. I want to get to METC. I'm going to forget all these. That's not good. But anyway, if we go to the Nvidia portfolio right here, obviously they own a bunch of CoreWeave. Speaking of CoreWeave, that's Nvidia's largest holding. Nvidia owns a bunch of CoreWeave, and Nvidia owns a bunch of APLD. Also, APLD and CoreWeave just went into a huge deal. Oh, wow. APLD's up another 7%. They reported earnings on Friday. That's the huge reason they gapped up. And if we look at their earnings, usually if you just look at what they reported versus what the analysts expect, it usually explains why the stock gapped up so much. So look at this. Analysts expected 45 mil of revenue. They reported 64 million in revenue. I mean, a huge beat. They also had a huge beat on net income losses. They expected them to lose 13 cents of EPS. They only lost 7, beat by half. So it was just a great quarter. Yeah, this is your data center hosting company. That was great news. So METC, what is this one? So this is Ramco Resources. What is the name of this application? Yeah, hey, what up, Relax? Hey, yeah, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. If you're on the YouTube stream, it's actually in the description. But if you're on TikTok, it's in the link tree in my bio. The first link there. Okay. Okay. So here's METC. The momentum has just been insane on this one. They're at an easy new all-time high. So let's go figure out what they do. And is there any news? This must be like an MP material type company. So let me go verify that. Let's go to profile. So, a coal. This is a coal company. And also they're in real estate. So they're a half real estate, half coal company, apparently. Export revenue excluding Canada. 11% of the revenue comes from India, Germany. That's interesting. Yeah, I know the actual commodity of coal is struggling. All the coal plays are, but the stock has just been on fire. I mean, that's insane. The revenue's only down 1% year over year. So revenue's down 1.5. They did lose net income the past couple quarters here, in the past 2 quarters. But dang, they own some rare earth mines or something. They opened a rare earth mine in Wyoming. Oh, thanks for that, Matt. Is APLD a good buy right now? I don't think it's a good buy right now, Gabe. No. It's worth putting on the watch list, but I wouldn't buy it here. Oh, Kinder Morgan. Hey, this is your oil and gas pipeline company. They literally have like over 100,000 miles of oil and gas pipelines. This might give you a K1 tax form. I don't remember. But there's a chance it'll give you a K1 tax form. It might be an MLP, but they have a great yield. Check that out, a 4.23% dividend yield. That's great. The PE is a 22. That's normal for the oil and gas industry, a 22 times PE. But yeah, basically natural gas pipelines. And yeah, look at this solid net income, easy 600 to 700 million in net income a quarter. So yeah, that's your oil and gas play. They're one of the better pipeline companies. They're kind of like an HESM. Larry said GWH. Is AMD a buy now? Oh, I do want to get to AMD. So actually this is a $160 million company. Oh, but they're up 150% on the day. There must be some good news, right? Uh, I don't know. Without that news, I'm not really sure what I could do because they just now basically started making revenue, 2 mil of revenue a quarter. Maybe they just got some huge order or something. I don't know. So maybe we can check the intelligent comments. Uh, incoming. These are all not too long ago. Anyway, there must have been some good news. Without that, I can't give you too many thoughts. Sorry. Is IAU good? Yeah. Hey, Jerome, this is the best way to get exposure to gold. There's also ticker symbol GLD, but GLD has almost double the expense ratio fees. This is the lowest fee expense ratio way to get exposure to the actual commodity of gold. And this ETF is run by iShares, which means it's run by BlackRock. So this is the BlackRock run gold ETF. That's also SIPC insured for $250K. So yeah, IAU is the best gold ETF. So Lawrence said, PDD, this is actually Pinduoduo. This is the stock that actually owns Temu. So if you've heard of Temu before, this is the stock that actually owns it. And this app is telling me, what is this right here? What is this? This is a double top. So there's some technical analysis over here, a double top. But anyway, I like looking at their actual numbers, their financials. So we can see their active customers. They have 750 million monthly active consumers. But let's just go to their net income. And we've converted this is a Chinese company, but we've converted their currency from Chinese to USD. But yeah, look at this net income, easily 2 to 4 billion in net income a quarter. The profits are insane here. Yeah, sales are up 9% after it grew 85, after it grew 53. So yeah, there are some different tax rules now. Like they used to be able to take advantage of like the souvenir tax where you could like ship something to the US under $300. Tax-free, and I think that loophole might be closed. I don't know. Pinduoduo, that's Temu. I like Amazon. Amazon is releasing something called like Amazon Nova. It's like a different thing from normal Amazon to compete with them. Someone said, I need a mentor. Hey, by the way, I don't mentor. Sorry. I don't sell anything. I don't have a course book, WhatsApp, Telegram. I sell nothing. I'll never follow you, DM you. So yeah, watch out for people impersonating me. So, let's do AMD stock. I'll be quick about this one. This is actually my choice of semiconductor plays. So, I do own AMD, full disclosure. Where is AMD? Right here. So, yeah, I do own I own 11 shares of AMD at $124 a share. This is my pick of a semi play because I think they're an easier double than Nvidia because of the law of large numbers. They're a $350 billion market cap. Nvidia is worth $4.5 trillion. So for you to double your money on Nvidia, they have to be worth $9 trillion. It's a tough double. I think AMD's maybe a better play because OpenAI just pumped a bunch of orders. Also, OpenAI has a 10% stake in AMD. And here's what's kind of circular. OpenAI owns 10% of AMD, and Nvidia just took $100 billion stake into OpenAI. So now Nvidia's stock goes up whenever AMD goes up, which is crazy. Or Nvidia stock indirectly benefits from AMD going up because they technically have a stake through their stake in OpenAI. But anyway, these estimates are probably going to get revised higher. AMD always beats on their revenue, so we'll see it get revised higher. Someone says AMD has more debt. Actually, AMD has no net debt. I'll just do the math for you. If we look at their cash, they have let's actually double check. They have $6 billion of cash, and let's see their debt. Long-term debt, $3.2 billion of debt. $3 billion of debt. What was the free cash flow? The free cash flow was $2 billion this quarter. The last thing you're worrying about on AMD is their debt position. So debt is no fear. They're printing net income. They're making nearly $500 million to $1 billion in net income a quarter. The free cash flow growth is insane. Balance sheet's good. So yeah, that's why I own AMD. What's their market share? Yeah, PC GPU market share is 14%. How long should I hold MP Materials? I don't know, man. That's I know they're starting to recognize revenue in like 2026, but I'd maybe trim a little bit, maybe take a little bit of profits, but I wouldn't fully sell out of MP Materials yet. Yeah. Yeah. Think it's too late to invest in defense stocks like Rain Metal. Yeah. At this valuation it is. A lot of the aerospace defense names are just like at insane valuations. I wouldn't put, I'd maybe nibble on them, but I wouldn't put meaningful size positions into these companies yet. Like GE. Yeah, this is a Danish company or SEK. What currency is that? Or Sweden. Oh, yeah. There's your Sweden aerospace. Yeah, they're making good net income. Let's see here. Those hockey stick graphs are scary. Hey, yeah, I don't. You think Race is a good buy right now? Well, hey, actually, I actually just bought a little bit of Race. I think Race is a good nibble. Like you have to be so patient with this one. Like I maybe buy 1 or 2 shares right now. I wouldn't go all in. What app is he using? Yo, hey, what up, D1? Yeah, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. By the way, this is a brokerage. It's where you buy stocks on. And full disclosure, it's an affiliate link. So if you go and deposit $100, we'll both get some like free stocks. Angle, I'm playing the stock market game and in school and about 70 shares of Baba and it's losing. Well, hey, you lose if you sell. Honestly, Baba's a decent one. Basically Chinese Amazon, business to business more, but yeah, they own AliExpress. It's like an e-commerce play. This is a Chinese company, but we've converted the currency from Chinese yuan to USD. They make good net income, 4 to 6 billion net income a quarter. If you average it out, you get a 0.6% dividend yield. So, and they're starting to get into GPU manufacturing to help fill the void that Nvidia, because Chinese companies can't really order Nvidia chips anymore. So I actually do like Alibaba. Probably not a great valuation here, but I mean, I would just hold on to that one. I wouldn't really sell out of that one. Just bought some Pinterest. Hey, nice. Why is Nvidia up 25% today? It's not because, yeah, hey, it's just momentum there, Prime. Yeah, lots of momentum today. CRMD, Rich Tech Robotics next. Hey, so actually, here's Coremetics. Do you have POWL? Yeah, I have POWL. Yeah. Oh, yeah, we got to get to PayPal too. I forgot about PayPal. What about Path? Yeah, we're down bad on UiPath. Here, actually, speaking of Coremetics, though, I do own them in my Roth IRA. If we go to my Roth IRA right here again, our Roth IRA is just a tax-free retirement account. We do own 23 shares of Coremetics, and we're down 21% on our position. Delcath is up, though. That's, again, these are so risky. These are the kind of stocks you cannot make these meaningful size positions in your portfolio. I can't stress this enough. If you like Coremetics and the numbers I'm about to show you, you can't make that a meaningful size position in your portfolio. But here's the reason I bought this company. Their numbers blow me away. If you look in the top right, the whole company, the market cap, they're worth $820 million. So you could buy the whole company for $800 million. And they literally have $190 million of cash on hand with no debt. So literally 25% of what you're paying right now is literally their cash on hand. So 20% of the market cap is just cash. So what is the rest of the business? It's a super growthy one, printing net income. This is, by the way, a healthcare play. But let's see here. Come on, revenue. If we look at the net income, this is crazy. Look, so $800 million company with $190 million of cash, making 20 million net income a quarter. I kid you not. They're making 20 million net income a quarter. The sales are 40 million and the net income is 19 million. That's because the net margin is a 49%. They have insane net margins. And it's not like the analysts are expecting the growth to fall. The analysts are expecting the growth to double. Revenue goes from 39 mil to 100 million in 2 quarters. EPS, which is net income, is supposed to go from 28 to 73. The net income is supposed to double. And check this out as well. Because they have 190 million of cash and no debt, that's what's so great about this high rate environment for the cash rich companies. They have $190 million of cash. It's not just sitting there in an account earning no interest. They actually made $800,000 of positive interest after paying everything. So they literally make they made $800,000 of interest on their cash just this quarter. That goes straight to the bottom line. So $800 million company making nearly $1 million of interest a quarter, 20 million net income a quarter, expected to double to 40 million. There is some risk though. Like they just sell one product right now called Deaf and Cath. Their patent expires in 2033. 60% of their sales come from one hospital group. But to counteract that, they actually just acquired a company that this is actually part of the reason why the analysts are expecting the revenue to double is because they just bought a company to add 6 new products to their portfolio. I'm a believer in that one. I think it's worth the bet. I mean, $800 million market cap, 190 mil of cash, no debt, earning 20 million net income a quarter. Sign me up. So as much as I love them though, I only put $200 in here and I'm already down 20% or like $300. So yeah, that was my pitch for that one. TAP stock, you know what? That's one of my top favorite drink stocks right now. I'll show you that right here. We're actually down on them. We're down 8.6% on our position. But when you include the dividends we received, we're only probably down like 2 or 3%. So TAP, you're mainly buying this for the dividend and the dividends and share buybacks. You won't believe this. You won't believe it. So check this out. TAP, we go to the dividend. Not only look at this dividend growth, you get a 4% dividend. You buy the stock right now, you get a 4% dividend. The payout ratio is only 33%, and that's real. The payout ratio is only 33%. And since they have so much left over, first off, one of the reasons why the stock is struggling is because the growth is gone. It's kind of normal for the industry right now. The sales are down 1%. Like, it's negative. That's terrible. Sales are down 1% after it fell 0.4. So the growth is kind of gone, but they're still printing net income. Oh, hey, there's a super old YouTube video I made about this one. Not super old, October 3rd. Anywho, there's been no comments on this stock ever since my anyway, this is a drink company, but check this out. They made 424 mil of net income this quarter. So remember that they made 400 million of after-tax net income this quarter. The dividend only cost 93 million. If you look last quarter, the cost was 99 million. How did the cost of the dividend go from 99 million to 93? Because they're doing insane share buybacks. They spent they're spending easily over 100 million of after-tax net income on share buybacks a quarter. And again, that if they're spending this 90 million they're spending a quarter on dividends equals a 4% dividend. If they're spending more on share buybacks, that means you're getting 4% also in share buybacks, and you are. So if you go to the net income is down by 0.2, but the net income per share is up by 4.9 because they bought back 5.5% of all the shares on top of the 4% dividend. This is my kind of stock. Again, I don't expect them to outperform the market in the long run, but I love the share buybacks. I love the dividend, and I bought them. So here's another super share buyback friendly company. And this one also has done really bad, so I feel bad if you own this one. But look at this. PayPal is the same price that it was in 2017. Staydex said, good night. Any underrated stocks with 5-year potential? Yo, I got a lot of those. Oh, we'll look at Amazon. We got to look at Amazon. And hey, what up, Henrik? He said, bro, what up, bro? Or maybe is that a stock? Is BRO a stock? Oh, we'll look at VICI too. So anyway, yeah, PayPal right here. Here's the value I find in this company. First off, they're trading at a low multiple because they're not too growthy. They're trading at 14 times PE. That's like a commodity multiple. That's a multiple where they're not really expected to make or lose you any money. That's because they're slow growth. I mean, the revenue's up 5%, mid-single. Every quarter this year, the sales are only up by single digits. And last quarter, it was up 5% this quarter, but last quarter, the revenue is only up 1.1% from the previous year. That doesn't even beat inflation. Add inflation to this, the sales were only up 1 or 2%. But here's the value in PayPal. They're making $1 billion of net income plus a quarter. What is PayPal doing with $1 billion in net income a quarter? Since they don't pay a dividend, they're deploying it all on share buybacks. They're spending over $1 billion in net income a quarter on share buybacks. Here's again what that does for you as a shareholder. So the net income is up by 12% year over year, but the net income per share is up by 19. I mean, that's part. Again, they own Honey, they own Venmo. So yeah. Ooh, Rocket Lab stock. I want to get to Rocket Lab. Hey, what up, Larry? We'll try and get to TVRD. I don't know. We'll get to that one eventually. I want to get through a few more here, though. Yeah, I want to get to Amazon and VICI. Thoughts on Verizon for dividends? Yeah, Verizon's a pure dividend play, not one I'd buy if you're 10 years away from retirement. So here's Rocket Lab. This is my favorite space play. I've looked at ASTS. I've looked at Lunar. And this is my favorite one. And because they have real revenue and real growth. If you go to their main business, their space systems revenue, this is how I can trust this company. This is what kind of justifies the high momentum. I mean, the sales are up 30%. After it grew 94, after it grew 9. So they're on a streak right now. They're on a growth streak, and not just on their space systems business, but also on their launch services. That's up 60% to a new record. It's never even been close to 46 million before. So that's at a new record. They're beating on the analyst expectations. The orange line's what the analysts expect. They expected 135. They reported 145, a good beat. They are still losing that income every quarter, but they're also acquiring companies. Let me actually see if we can find any weekly news. Rocket Lab secures multiple launch contracts with Japanese space agency. Hey, that's pretty cool. So yeah, that's my main space play, but they are definitely overvalued right now. Though multiple does look expensive. Is SoFi good buy right now? Not yet. SoFi isn't a good buy yet. They need to go lower, but they're a great long-term hold For sure. So I haven't looked at this stock today. Yeah, what up? HUS said Amazon stock. So yeah, this is, if you're like me and have the intention to never sell Amazon, it's worth buying even right here, even right now, because this is like an ETF in one. I mean, actually, a lot of people don't even know the most valuable part of Amazon, the part of the business that brings in the most to the bottom line, that gives them the most net income, is their web services, their AWS business. They're the largest cloud service provider, and it's over $100 billion of annual revenue for them. This growth is insane, and that's just one part of their business. They're an e-commerce play, a book play, subscription play, advertising play, robotics play, satellite play. I mean, they're literally a UPS, a FedEx, a Walmart, an Instacart, an Oracle Cloud, all in one. I mean, and this is a company you don't want as competition. If we go to their cash from investing activities, this is why they're so innovative. I love the fact that Amazon doesn't do any dividends and doesn't do any share buybacks, because this has always been a company that just reinvest all their profits back into the business or buying new businesses. That you could tell because they're spending legit $30 billion a quarter on new assets. So, probably a lot on AI right now. Here's how Jeff Bezos is so rich. Check this out. Jeff Bezos, or Jeffrey Bezos, owns 8.3% of a $2.35 trillion asset. So then he just takes out a loan against his shares, tax-free. He only gets paid $1 a year in revenue, but he's worth a couple $100 billion from his stock. So whenever you receive stock, that's tax-free, So Kianyan said, Vici, this is your Vegas play, we'll call it. So they own they do triple net leases for a lot of Vegas properties. Have you guys seen the Las Vegas Sphere? They own the land under that. They own the Luxor. They own the Caesars Palace, the MGM Resorts, the Wynn. They literally, the Luxor, like the Black Pyramid thing, they own so many. They own the land under all the popular Vegas properties. And so this is a real estate company. You get a 5.6% dividend yield. Pretty cool. So this is a REIT, a real estate investment trust. And yeah, actually these REITs have a rule where they have to pay out 90% of their taxable income in the form of a dividend. So that's why the yield is so abnormally high. Let's see here. Okay, so here, speaking of Verizon, if you're 10 years away from retirement, I wouldn't buy Verizon, because Verizon just isn't a stock that'll total return outperform the S&P. Like, did you know Verizon is the exact same price that it was in 1997? So you bought Verizon in 1997, it's the exact same price today. Same kind of with AT&T, all the telecom stocks. AT&T is the same price that it was in 1997, just like Verizon. So again, you're buying these for the income. Like AT&T has a 4.4% yield. Verizon is like a 6% yield. But yeah. Hey, what up, Cruz? Shout out to the homie Cruz. Can you check out Space is the Future, the Breakthrough? Yeah. Hey, what up, StateX? Freeport Hey, Dr. Sri, if you give me the ticker symbol, I will definitely check out that stock. I've heard of them before. I just forgot the ticker symbol. Okay. OBDC. Yeah. Hey, that's another kind of stock you buy to maximize your income. It's probably the second best BDC out there. But again, you don't want to buy this if you're far away from retirement. Because they're just like the REITs, where literally by law, they have to pay out 90% of their taxable income in the form of a dividend. So when you go to the dividend, this is a 13% yield. It's actually normal. But again, this is half the price that it was in 2019, So you're buying that to maximize your income. Probably, you'll probably every year you won't keep up with the S&P 500 on a total return basis, but you get the nice income. That's one of the better BDCs. I also like Main Street Capital. I'm about to retire. Is Beyond Safe 10? No, hey. Oh my goodness. Someone said, okay. Hey, what up, Luigi? Hope you're having a great day, though. He says, I'm glad I get to teach you this. He says, I'm about to retire. Is Beyond Safe, or it's Beyond Me, a safe 10X? This is the farthest thing from a 10X. I mean, oh wow, they're down 50% in the day. Hold up, what happened today? Well, probably bankruptcy, probably filing for Chapter 11, because here's why I saw this coming. If you look in the top right, the market cap, and it was higher today, but they're worth $81 million. So the whole company's worth $81 million. Look at how much they're losing every quarter. 30 million, 50 million. You know, when you're worth 80 million and you lose 50 million, you know, that's like your whole company. So just for all of time, they could just never get profitable. They've just been burning through 50 to 100 million every quarter for all of time. They're super leveraged. You know, how are they going to pay off this debt? You know, while actively losing more and more money every quarter. So this one will probably, and not financial advice, will probably just keep on spiraling down and down to zero. I hope not, though. What is this? Is this Robinhood? No, hey, this is not Robinhood. By the way, this is another brokerage. It's called Mumu. If you want to get it, it's in the link tree in my bio, the very first link there. Full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get like some free stocks. But yeah, this is my favorite brokerage right here. I do have Robinhood though, but I think it's much more useful. I wish I knew about Mumu before I got Robinhood. But yeah, there's my Robinhood portfolio. Okay, I do have Robinhood also linked up there, affiliate link. Don't forget about TV. Oh yeah, TVRD. Let's check this one out. So this, oh no, all-time low today. Yeah, hey, I would not trust this one with anything meaningful because if you look in the top right, they're only worth 62 million. So the whole company is only worth 62 million. Let's see what happened today. Fails to show any clinical benefits. So here's the thing. They just, oh no, I can totally understand why this one's at all-time low. Just know this. This is why the stock's down 85% today. If you go to the revenue right now, your revenue, it says zero because they've never sold anything. They've never sold a product or a service. They're in clinical stage trials. And in report today, here's the result of their trial. Their lung disease fails to show any clinical benefits. So now they're in a position where it was a company where they have no revenue and they had a plan to sell something. Now they have no plan to sell anything because their prescription didn't work. So I can see why they're at all-time lows. Be really careful. Do you recommend Mumu's holding company? I do, Marker. I actually do own Futu stock. Yeah, I love them. I also own Robinhood stock. You know, the brokerages make good money, so I do own the stocks. Ed said, what do you think about ALTS? Is it a good buy right now? Let's check it out. So this is, Alt 5 Sigma. Okay, let's check this out. I've actually never heard of this one. They're the same price as they were in 2019. Is this like a Bitcoin company? Let's see if there's any news here. Weekly news, please, if you'll load for us. Okay, yeah, okay, check this out right here. Oh, no way. So Alt 5 Sigma expands WLFI ecosystem with Robinhood launch and debit card integration. So maybe they're doing some sort of partnership with Robinhood. I did not know that. The stock has not done too well, though. We'll go look at their numbers. So they're a fintech. The revenue just says fintech. The sales are growing nicely. Oh, they have no sales, though. Super small company. So yeah, what's the market cap here? This whole entire company is worth $300 million. So just beware, they're only worth $300 million, but they pretty much just transitioned from a revenueless company to finally having revenue. Still, yeah, they lost 10 million. Anyway, I would be careful. We want to not see them lose a lot of money. PGY next. Let's do PGY. What up, Ishwar? What's up, man? Hope everyone's having a great Monday. This is Pagaya Technology. Hey, I do have this one on my watch list. I don't remember them. And I don't remember why I put them on the watch list, but there must have been something I liked. So let's go figure out what it was. They're worth exactly $2 billion. Do they have revenue of, okay, wow, this is great. Sales are up 30%. After it grew 30%, after it grew 13%. So they're on a nice little growth streak and the profits are very good. So if we go to they had some little one-time adjustments to their net income back here. So you really just look at the operating profit to see what the core business is doing. They're the most profitable they've ever been. And they still made 16 mil in net income, but they really should have made like 30 mil in net income. So there was something weighing down on them. But the operating profit is phenomenal. They're expanding margins. Let's see. Yeah, this is great news. So I like the growth here. I like that they're the most profitable they've ever been. As long as they continue this trend, I like them. Nice. IONQ overvalued? Yeah, definitely. Same with Oklo. Oklo is the biggest bubble out there. Oklo, here's the thing, they're a $25 billion company. All right. $25 billion for an idea. Check this out. If we go to their revenue down here, it says no data because they've never sold anything, not a product or a service. So $25 billion company losing net income every quarter. And they're not going to have any revenue for a couple years, like a year to 2 years as well. This is a small modular reactor nuclear play. They want to make these SMRs, and there's only 2 working small modular reactors in the whole world, or 3 of them, and none of them are in the US. that one's the worst one out there. Is BURU overvalued? Definitely. Please stay away from BURU. Yeah, we've been talking about a lot of trash stocks here. This is another one of the one of the trashier of the trash stocks. I mean, I'll just show you the numbers for yourself. You can draw your own conclusions. Here's why. Like, please, if you see a stock like this, please check the numbers before you buy. Like, here's kind of the thing that keeps me away from buying this. If you look in the top right, the market cap, they're worth 65 million. So if you wanted to, you could buy this entire company for 65 million. All right. So you pay 65 million. Here's what you buy. Here's what you get. You're buying a company that lost 12 mil in net income this quarter. You know, that's 20% of the market cap. And then 16 mil last quarter, 11 mil. So they've lost nearly the same amount of net income as the whole company's worth. And do they have, if they're losing all this net income, at least do they have high growth of the revenue? No. So the revenue is now zero. The revenue is down 97% year over year. Look at, they have no assets. The assets are 2.4 million. The liabilities are 50 million. I mean, everything here is heading in the wrong direction. And that might be why people like it though, because the numbers are so bad that they're pretty much priced to zero, that maybe they could, like, you swing trade this. You have a plan to get out, but yeah, just make sure you know those numbers before you, main thing I want to do here is like help people, like, just not buy bad stuff. And hey, I'll just say this, by the way, I sell nothing. I don't sell anything. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. Please watch out for people impersonating me. MIR said, no one said BU. Hey, yo, dude, hey, MIR, I am streaming on both TikTok and YouTube right now, so I'm reading both chats. But what's up, Mer? Hope you're having a good Monday, man. Yeah, this is not a replay. This is live. You can see this time in the top left. Yo, today's a great day to be in stocks. Let me check out the Qs real quick. Qs are up 2%. Yeah, everything's green. Great news. Same with how's our Webull portfolio doing? Sorry, we'll give a quick portfolio update, then we'll get back to this. We're up 1.63% on the day. We're only up 19% all time. I just love being fully transparent. You know, I go to a lot of other streams on TikTok and YouTube to see what other people are doing, and no one's transparent, and everyone's always selling something. So I'm just on here. But hey, by the way, the one thing I do, best way to support me, if you want to support me, best way to is just subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. But yeah, hey, Papa Dan, what up, dude? He said grab stock. Oh, Brian said ARMY. Hey, what up, dude? Remember, hey, I do. What's up, dude? Hey, what up, Tomek? What up, Yobalee? We'll check these out. Didn't beat placebo. Oh yeah, back to that one. Yeah, so here's Grab Holdings. If you're wondering what is Grab right here, this stock is literally international Uber. They do literally exactly what Uber does, but notice where the revenue comes from. Notice the US and Canada aren't on here. That's why I call this international Uber. You know, 29% Malaysia, 23% Indonesia, Singapore, Philippines. And that's what was so genius about Uber acquiring the business. If we go to the largest shareholders, you know, who owns the stock? The largest shareholder is Uber. And then also a Toyota Motor owns 5.5% of all the shares. So first off, this stock is backed by Uber. And that was genius by Uber because that gives Uber instant international diversification because Uber's main markets are US, Canada. Like, it's a proven model. People want stuff delivered to their house. People need Uber or the commodity of, you know, being in someone's car with them and let them drive you. So we know the commodity works, and it should work all around the world. So that's why I like Grab. I don't own them, but they are making net income every quarter. I love the fact that they're backed by Uber. Like, that's just like a huge safety net. And the expectations are amazing. You know, revenue was 820. They're expecting 930 in 2 quarters. So there's Grab. I can see why they're doing so good. Okay. Thoughts on Joby Aviation? So both of these are both revenue lists. So that I stay away from both of these. Hey, thanks, ASPS Manny. So the reason I stay away from Joby and Archer, just because if you go to both of them right now, you go to the revenue, both of them are zero. Or well, the revenue was $15,000, down 46% year over year, and they're losing a couple $100 million net income a quarter. Now if you're wondering how they're losing a couple $100 million a quarter, how are their assets staying the same and growing? Well, that's because they've been diluting the life out of the shareholder. But what's cool about this stock is Toyota Motor owns 15% of all the shares. So this stock is kind of backed by Toyota Motor. But here's the thing. I just personally right now, I could not pay $14 billion for kind of future hopium. You know, they're losing a couple $100 million a quarter and the sales are only 15,000. It's just not my kind of stock. If I just to trust it to buy and hold for the long run, I wouldn't. Oh, but it looks like the revenue is supposed to, well, again, 14 bills, it's a tough to get to that valuation, but with revenue, but the revenue was 15,000. They're expecting 3 million in 2 quarters. So watch out for that. Super Micro and SoFi stock. Hey, actually, should we get to SoFi? I saw Serve Robotics. Serve Robotics, this is another one that it's just hard to trust at their right now stage. I think Serve Robotics, I think this might have been the company that was partnering with DoorDash. Wait, let me verify that. If this is the company that was partnering with DoorDash, I actually really like this stock. Let me actually go to the weekly brief. I think they had like over 100,000 like successful food deliveries with here DoorDash and look at this. Serve Robotics has completed over 100,000 deliveries from 25,000+ restaurant locations in Los Angeles. So basically they deliver you food in an autonomous vehicle, or that's what they're partnering with DoorDash for right now. So right now the revenue isn't great, but you're buying the future hopium there. The revenue is a couple 100,000, 600,000 this quarter. They have a phenomenal balance sheet, no net debt at all. How much cash do they got? Let's see. $183 million of cash and no debt at all. That's insane. So that's a huge safety net. Wait, what's the market cap again? 1.1 billion. Wait, literally, 7.5% of the market cap is just their cash on hand. So that's kind of cool. I actually, they're on my watch list because of that DoorDash partnership. That is interesting. Maybe DoorDash will buy them. Who knows? That'd be cool. So Tomex said, thoughts on the trade desk, TTD. Yeah, this is your TV advertising company. I would be careful with this one because the valuation is still a little high. I think they're going, I would nibble on them here, but I wouldn't full size buy them yet. Because here, I'll show you this. If we go to their net income multiple, the PE ratio is just the net income multiple plus any share buybacks or dilution. And they're trading at 62 times net income. And that's not like on some one-time adjustment, like they're really trading at this expensive 62 times net income. And that's why they gapped down so tremendously on earnings when they missed on growth expectations. Basically, this is a CTV, basically TV advertising company, and Netflix used to use the trade desk to find ads in their new ad tier service, but they're seeing some increased competition. Netflix actually, they lost Netflix and they went over to Amazon and Roku. Amazon and Roku have a big partnership, and that's their competition right now. So, but I still like them and they're on my watches. They're definitely worth putting on the watches because they still make good money. They're easily making, if you average it out, not over, but probably 100 million one day. They're going to be making over 100 million in net income a quarter. Their margins did fall. If we go to the sales, the revenue's up 18, but the net income is only up by 6. That means the margins did fall by 11% year over year. So I think the combination of the 62 PE, the margin fall, losing some customers, I would wait. I would be patient with that one. I'd maybe nibble on them today. That's kind of what I'm doing with some other companies like Ferrari right now. I bought my first shares and I'm being super patient. Like I'm probably not even going to buy any more Ferrari till they fall another 10% because I know they're still really expensive for the slow growth that they have. So yeah, sometimes you got to be disciplined. I recommend DCA, dollar cost average, instead of spending all your money at once. Oh, let me remove that Coca-Cola. You instead of spending all your money at once, you slowly buy into it over time. What is Coupang? What? Hey, Rocky, is that a ticker symbol? Yo, try not to spam there. Hold on here. Actually, sorry, Rocky, I'm gonna have to mute you there. I don't think that's a stock, and I think he's just spamming. So, Amit said SPX. That's the S&P 500 index. So you can't buy these on brokerages. You can't buy the index. So that's why you buy an ETF, an exchange traded fund like VOO. So instead of the SPX, if you just want to buy the S&P 500, you would buy ticker symbol VOO, the S&P. It's literally the exact same thing, moves exactly the same weighting, same holdings, but just on an exchange and you can buy it. So yeah. VOO is the S&P 500. Open Door. Hey, what up, Young? And Ed said Open Door. Yeah, let's do it. I saw some Open Door requests. This is your interest rate sensitive momentum play. I've been to a few Open Doors. What does this company do? They flip houses. And quite frankly, they're not good at their renovations. But there's been a lot of momentum around the pay packages of the board if they can get the stock to a certain price. And basically, I wouldn't touch this one. But here's why a lot of people like this one. If you go to the revenue right now, or if we actually scroll out to 2022, check out what happened the last time we were in a basically 0% interest rate environment. They were so growthy, printing money, 4 to 5 bill of revenue a quarter. But notice what happened as rates hiked up in 1 year very fastly. Look what that did to their sales. They plummeted down 70, down 69. So this is a super interest rate sensitive play. They're still losing net income every quarter. Oh, wow. The revenue. Whoa. Is that real? Revenue is supposed to collapse to 500 mil? I mean, it's never, ever been that low before. I mean, the lowest ever was 980. Well, that's not great if that's true. Anyway, you're buying this for the momentum. And honestly, actually, let's go look at the interest rate cut probabilities. That's what's cool. Actually, we go over here to markets, stocks. We can see the interest rate cut probability. So yeah, literally on October 29th, there's a 98% chance of a 25 basis point cut. And then on the next December 10th meeting, there's another 96% chance of another 50 basis point cut. There's a clear rate cut path right now, and it should benefit the interest rate sensitive stocks. Oh yeah, there's a lot of cool features on here. Yeah, you can look at all the different investment themes. This is where I find a lot of new stocks. One day I want to do a stream where we just look and find new stocks over here, like some drone concept stocks, see if there's any good ones. Like the only good one I found is like Red Cat so far with their NATO approvals. So there's so many cool industries I eventually want to get to. Okay, so let's keep going here. Thomas said SoFi. Absolutely SoFi. Oh yeah, hey, by the way, this is a brokerage I'm on. If you want to get this app I'm on, it's in the link tree in my bio, the first link there. It is an affiliate link, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But here's SoFi. This company isn't propped up on momentum. You look at Oklo right now, you look at some of the quantum names. I mean, it's pure momentum. They're going up without a purpose, with no reason, but SoFi is going up because of their good growing fundamentals that beats every analyst expectations. So if we go to their financial services right here, this is so growthy. What up, Luffy? Hey, remind me to get to that stock, Luffy. So look at this. Their financial services are up 105%. After grew 80. After grew 222. After grew 260. The growth is just insane. And if we look at what the analysts expect every quarter, that's the orange line. They're every quarter beating on what the analysts expect, beating on revenue every quarter, beating on EPS, which is net income every quarter, beating on EBITDA every quarter. So no wonder the stock is gapping up every time they report earnings. I really just think people are starting to take SoFi serious. They did 850 mil of revenue, and 100 million of it was after tax net income. They're making net income every quarter. I do own SoFi. I might be biased, but yeah. Why do you use Mumu? Hey, Mumu's just super useful. Actually, I have a bunch of other brokerages too. Here, I'll show you my SoFi position. They're in my Webull account. We got some big losers in here, but we do have some winners. Actually, SoFi is one of my biggest regrets. I regret every share I've ever sold of SoFi. I regret every share I've ever sold of Robinhood. And some other companies as well, like Dave. But yeah, we do own them. And we have a Robinhood account as well. Yeah, by the way, if you want to get any of these brokerages, they're all in the link tree in my bio. They're affiliate links, full disclosure. But out of all three of these apps, though, my favorite, the lowest fee brokerage, the free one, this is my favorite one right here. Most useful. This is Mumu. It's in the link tree in my bio, the very first link there. So let's keep going. Oh, yeah, Shark Ninja. You know what? I'll just type it in for you. I don't remember there it is. All right, we found it, user39. What up, dude? This is Shark Ninja. If anyone's heard of those Ninja blenders, like Ninja ice cream kitchen appliance stuff, well, they're actually publicly traded now. They IPO'd not too long ago, year and a half ago, and they traded a fair multiple. They just sell a commodity, so that's why. But I mean, they're trading at 24 times PE, pretty fair. Yeah, cleaning appliances. How's that growing? It's up 7% year over year. Single digits. Whoa, that's actually insane. So if we go to their food preparation appliances business, that's up 52% after it grew 84. They're on a streak of that growth. So let's just go down here to the net income. Yeah, that growth is so good. They're easily making over 100 mil in net income. The net income has doubled. Yeah. So I don't have much bad news to say. I mean, I don't know if this will really outperform, the tech-heavy S&P 500, but as long as they can keep up this growth, I mean, that's unexpected. That impresses me. So yeah, there's your Shark Ninja. Oatly stock. Is Oatly still public, or did they go bankrupt yet? Oatly. They're not even an American company. I don't even know if we'll be able to view them. But yeah, they make oat milk. Oatly Group. Hey, no way. They still exist. Surprised. What's the market cap on them? Yeah, $400 million. Well, let's see. Are they profitable? They're a $400 million company. Yikes, yo. I may maybe short this one. They're worth $400 million and they lost 55 mil, 12 mil, 100 mil. That's 1/4 of the company. China, wait, China Resource is the largest shareholder. Anyway, yeah, stay away from Oatly, in my opinion. Oh, only 30% of the sales are in the US. Cool. MSTR, what up, D-Man? Yeah, MSTR, this is your basically Bitcoin holding play, pseudo Bitcoin play. To be honest, I'd rather probably own Bitcoin, but this company does something very interesting. So if you go to their balance sheet, if you're wondering how did they gain so much assets, how they go from 7 billion to nearly 70 billion of assets, well, that's because here's what they're doing. You go to the cash and financing activities. Whenever they issue shares, it's shown up here on the cash and financing activities. So they literally, I kid you not, 3 quarters ago, they diluted the shareholder by $18 billion. They issued 18 billion worth of shares and bought 18 billion worth of Bitcoin with it. And that Bitcoin they bought is now up 30%. So their strategy works great in a bull market. So that you really just trade this one off their AUM or their NAV, their net asset value of all the Bitcoin they own. So yeah, that's a pseudo Bitcoin play. Hey, we just looked at SoFi there, YY. If you give me a little bit, we'll probably check them out there. YouTube agent said SMH ETF. Heck yeah. Hey, yo, shout out to the homie Celebrate on the YouTube stream with the 30 ZAR. No way, dude. Thank you so much. You just made my Monday. We'll definitely check out both of those for sure. So here's the semiconductor play. If you're like, do I buy Nvidia or AMD or Broadcom? I don't know which one to buy. Well, you can just buy this ETF right here and it breaks all your money up for you into all the different semi plays by market cap. So look at that. Nvidia is the largest one because obviously it's the largest market cap, then Taiwan Semi, then Broadcom, AMD, Intel. Hey, no way. The biggest pawn. Heck yeah, dude. He just gave me some boxing gloves. So I appreciate that, man. He said FURY. Let's get to FURY real quick. Then we'll get to those other stocks. Ever heard of a stock called GRR? I have heard of that one, Marciello, but I don't love that one. Maybe we'll check them out. Do you think SoFi will hit $30? After the earnings reports. Yo, I hope. That'd be great. But I think it'll hit $30, but probably not as soon as we think. But here's Fury Gold Mines. They're a very small company. They're only worth $150 million, and they're not doing too great, but probably just because of the price of gold right now, this one's rocketing up. They're up 22% of the day. So, if you own them before today, you got to be up on your position. They're Canadian, so we'll convert their currency from Canadian to USD. So they don't actually sell anything. We go to revenue, it says no data because they've never sold anything, not a product or a service. Their assets are slowly declining. Did they lose a bunch of net income? Yeah. So look, whenever you lose net income, they lost 69 million. That number has to come from somewhere. So that's why the balance sheet plummeted. But this is a pseudo gold play in my opinion, and there's a lot of pseudo gold plays like Denshin Mines. We were just looking at this one. There's Denshin Mines next to the actual commodity of gold. So you get exposure to gold and you get a dip. Oh, that one doesn't pay a dividend. So I don't love that one, to be honest with you, but they had some nice momentum today. Hey, hold on there, Luke. There we go. Sorry. All right. Do you invest in any biotech? Not really. Just one. But yeah, here's Royal Gold. This is another one of my favorite gold plays. You get a 1% dividend yield. And this is a company that collects a bunch of gold royalties. So this is a royalty gold company. They have like a net margin. Their net after-tax margin is a 63%. How do they have a 63% net margin? That's again because they're a royalty company. They're making over 100 million net income a quarter. They literally have no debt at all. Look at that fortress of a balance sheet. And you get a 1% yield. They do share buybacks. That's my favorite gold play. Okay. Hey, shout out again to the homie Celebrate for the super chat. He says NMIH. Let's check. NMIH. So this is NMI Holdings. I don't know what they do. I've never heard of them. So this is an insurance company, a specialty insurance company. Let's check out their numbers. And they're making consistent money, easily 90 to 100 million in net income a quarter. Really good balance sheet as well. So there's the first insurance company. I like this one. What's their net margin? 55% net margin? Where are they headquartered? Is this a U.S. company? Yeah, they're in the U.S. Wow. Yo, that's great. And then ENVA, this is Enova. This one's at an all-time high as well. Wait, is this that silicone molding company? No, I'm thinking of completely different stock. This is consumer loans and finance, and also small business loans. Oh yeah, the growth on this one's really good as well. Revenue's up 29 after it grew 32. Their main business is up 16 after it grew 30. So And they're making net income every quarter. What's the net margin here? So this one is a lower margin, 10% net margin, but the margin still grew. They're still making 70 mil a quarter. Sales are going nicely. Honestly, both are good picks. Both are good. Yeah, NMIH has higher margins, but ZAR is the currency code for the South African rand. Oh, hey, thanks for that, Looney. Hey, again, shout out to the homie Celebrate. I do really appreciate that. Thanks for sharing your view on Trade Desk. I bought a few shares long term. Oh, hey, nice, Tom. Let's see. I like, oh yeah, I forgot to get to BRO stock. I forgot to get to that one. So, oh hey, this app is telling me there's some technical analysis. What is this right here? Oh hey, what up, Young Zell? Hey, we'll get to SNDL. Yes, sir. Let's do SNDL after this. So this is a bullish continuation wedge. This app is telling me there's a 93% chance, or the rise probability is a 92% chance. I don't know about all that, but as you know, I like looking at the actual financials, the numbers. So this is Brown and Brown. It's like Johnson and Johnson, Morgan and Morgan. Whenever they have their last name twice, it's always funny. I saw a meme. So okay, hey, what up? Spread the wealth. I think markets are about to go nuts after that move down. Yo, dude, that was crazy. So here's BRO. This is a retail, I think, brokerage. I don't know. Yeah, look at the annual revenue. Just hits a new record every year. That's what you want to see. Programs revenue. That one also, yeah, just hits a new record every year, especially since 2020. It's just been straight up. And then they're also in wholesale brokerage, which is also growing very nicely. So all their businesses are growing insanely well. I can understand why this one is up like crazy since 2019. That growth is great. You also get a 0.6% dividend. They raise the dividend every year. Net income, let's see, net income. Yeah, 200 to 300 mil in net income a quarter. Look at that balance sheet growth. Whoa, did they just buy a company? I don't know, but they didn't buy a company, but they just financed $8 billion of cash. Maybe they're about to buy a company. Oh, Jay Brown owns 11% of the shares. So they're interesting. I like their numbers. I sure do. So SNDL, hey, thanks again, Young Zell, for the rose there. I appreciate that. So this is Sundial, I think, or I don't remember. Unfortunately, I think this is one of the solar plays that just you can't trust this one too much. Hey, Millers, what up, Millers? And Lopez says, thoughts on Hood? Yo, I love Hood. I think it's a little overvalued, but remind me to get to Hood. We'll get to Duolingo as well. So this is a $640 million company. So this whole entire company is worth $640 million. Oh, they're in this industry. Okay, never mind. If you look really quickly, I can't really talk about that industry, but I just don't love that industry, to be honest with you. Sales are up 8% after they fell 2%, after they fell 4%. And they're, if you average it out, they're losing net income every quarter. We want to see them make more consistent net income. At least they did make $2 million in net income this quarter. That was real. They have a decent balance sheet. The assets are trending down a little, but it's not the end of the world. They're at the end of the day, they're barely losing any money. Well, that was a one-time. It says they lost $50 million. They didn't. I don't know. It's really not the end of the world for them. It's not terrible. It's not terrible. Payne said I'm 50% SEHD and SEHG. Hey, that's actually a smart strategy there, Payne. Half super growth, half super dividend. Nice. Bob said my Oklo is ripping. Oh, hey, heck yeah, dude. Yeah, Oklo's on fire. I'd kind of recommend getting out of that one. I think they're extremely overvalued. So here's Duolingo. Hey, yo, the homie Jeff Mack is in here. Hey, we'll get to that stock next. And we'll get to Ulta too and AVX. So I want to try and get to all these. So here's Duolingo. This is one of my favorite subscription model companies out there. So as you know, this is that language learning app if you've heard of Duolingo before. And hey, George P. Hey, George, thanks for the rose there. The Rosa. The rosé. Thanks for that. So their subscription revenue is most of their business. It's 83% of the revenue. And check out how growthy it is. This is what I love about them the most, is how growthy this is. It's up 46 after it grew 51, after it grew 46. And if you don't pay for their subscription, you see a bunch of ads on their app. And if we go to their advertising revenue, it's up 55% year over year to a new record. So I love how growthy Duolingo is. They're beating on analyst expectations. They're making good net income every quarter, the most profitable they've ever been. They have no debt. The free cash flow is really good as well. So honestly, I love everything about Duolingo. But one reason why the stock is being hurt right now is just because of the AI thesis. Like again, the stock responded great to the good numbers, but slowly rallied it off because OpenAI, which is ChatGPT, who owns that, is creating a language learning app competitor. So is Google, and that app is free. So maybe in the future, people will just like, it can learn a language elsewhere for free. They won't pay for Duolingo subscription, but the numbers haven't gone down yet. I think they're worth nibbling on buying right now. Not with a lot of money, but let's look at Ulta Beauty right here. Yeah, this is one of your beauty and cosmetics plays, and they do insane share buybacks. You won't believe it. This is a much better buy, in my opinion, than an Estée Lauder. Elf Beauty's an interesting one as well, but check this out. If we go to Ulta Beauty right here, we want to see the growth come back. It kind of just has. Revenue's up basically 10% year over year. Revenue's up 10%, but look at, I love this net income. This is the good part. And it's really what they're doing with this net income. So easily Ulta Beauty is making 250 to 300 million in net income a quarter. What is Ulta Beauty doing with 300 million in net income a quarter? Well, since they don't pay a dividend and since the stock is cheap, they're deploying it all right now in share buybacks. I kid you not. They're spending 200 million plus of net income every quarter solely on share buybacks. Here's what that does for you as a shareholder. If we look at net income, the net income is up by 3%, but the net income per share is up by 9%. That's because the share part of the ratio went down so much. So I honestly, that's one of the best beauty and cosmetic stocks out there. Competitive industry, high margin industry too. Lisa said SoundHound AI. Oh, wait, actually, let me get to IPI. Then we'll get to SoundHound AI because that one is really cool, Lisa. Hey, Seuss, the homie Seuss. Okay. Seuss from Gravity Falls is here. Okay, this is IPI. This is Intrepid Potash. Oh, this must be an agricultural commodity stock, probably like a Mosaic company. Yikes, the stock has not done too good. That's because it's commodity related. Let's see. Yeah, potash. This is like for crops, I believe. Trio. Yeah, let me just go to the revenue down here. Are they making profits? So they're doing about 50 to 70 mil of revenue a quarter, and the net income is just, oh yeah, they can't make any real consistent net income. They did make net income the past 2 quarters, but 3 million, 4 million. We want to see them keep that up. Yikes, when they lost 200 million in net income that one quarter, the assets on their liabilities tanked down by 200 million exactly. Like it went from 800 million to 600 million. I'd rather the Mosaic company struggling hard as well. Here's another stock that pretty much does the exact same thing. There's like another one. It's like RF, or let me go to the ETFs right here. Wait, BlackRock Asset Management. That's the cow ETF. Oh, cow, like agriculture. Let's see what it owns. Yeah, I like John Deere. I love John Deere. I cannot remember the ticker symbol. Oh, it's CF. It's CF. This is the best one out there. It's ticker symbol CF. Yeah, they have the ammonia nitrate. Basically, they're making good net income. They're making 300 to 400 mil a quarter, and they also get they also do share buybacks. Hey, no way, the homie Dalton is on here. Yo, I love your YouTube videos, dude. Hey, yo, Dalton, I followed you on Mumu, and I tried to DM you, and you never responded. I'm just okay. Let's see. Thoughts on Nebius. That's actually a stock owned by Nvidia. Let me actually pull that up right here. If we go to the Nvidia portfolio right here, again, I wouldn't just buy a stock just because Nvidia owns it. You always want to go do your own research on it. And one of the stocks they own is actually Nebius, and they're at an all-time high right now. This is kind of like your data center infrastructure play. And the main reason they're at an all-time high is because Nebius did a $17.5 million deal with Microsoft Azure in their cloud business. Basically, it's part of the Microsoft Azure cloud. It's going to be on Nebius data centers, and pretty much they're at an all-time high on that. And this is why I love them. The growth is insane. I wouldn't buy the stock now, but look at this. The revenue went from 15 million to 100 million. That's an insane growth rate. And it was 100 million this quarter, but analysts are expecting in 2 quarters 265 million. So the growth is just insane on Nebius and the expected growth. So I mentioned that in a video. I saw too. Hey, it's all good, Dalton. I actually saw that video too. I think I left a comment on it, but it got restricted because I said something weird. I actually did leave a comment on the video, but I think it got restricted. Let's see here. Any good agricultural plays? Yeah. Hey, Steven, I love John Deere. Favorite agricultural commodity inflation bet. And you get a nice yield on this one, 1.5% yield, safe 22% payout ratio. They raise the dividend every year faster than inflation. So I think this is one of the stocks, it probably won't outperform, the tech-heavy S&P 500 in the long run, but you'll just be happy to own it as it probably will CAGR, maybe return you 8% a year, I think. I love that one. So, which one should we look at here? Oh, yeah, I wanted to get to, what was that one? Oh yeah, SOUN. Yeah, so this company used to be owned by Nvidia. Nvidia used to have a stake in this stock, and they sold out of it. But the stock is still doing really good because of their good numbers. Let me actually pull this up right here. So yeah, here's SoundHound AI. Wow, they're up 10% on the day. That's incredible. Actually, Nvidia sold the stock this day exactly. There was no earnings this day. It was the day that Nvidia sold all their shares. But check this out. If you're a shareholder of SoundHound AI, there's one metric and one number you got to watch, and that's this right here. Their subscription service, and it is booming. I mean, it went from a nothing burger, 400,000 a quarter to now 32 million, up 800% after it grew 800%. And that was a huge beat on what the analysts expected. Here is the analysts' expectations. Analysts expected 32 mil. They reported 42 mil. So a huge beat. They are still losing net income every quarter, but as long as they continue to grow at this rate, up 200% after it grew 50. I mean, I think this momentum is justified. So yeah. UAMY. Oh, yeah. Hey, I do want to get to that one. Good to see you streaming, man. Got a dip. Hey, see you later, Dalton. Have a great rest of your day. Yo, guys, if y'all want to hit the follow button, we stream every single day. I'm streaming on YouTube and TikTok right now. And by the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. Please watch out for people impersonating me. Actually, I'll give Dalton a follow. But yeah, let's see here. UEC. This is actually one of my more favorite uranium plays because they actually bought a uranium mine off Rio Tinto a while back for a couple $100 million. So they actually do have a legitimate uranium asset. Like some of the other uranium stocks are kind of junk, but this one is probably one of the better ones. It's mainly just following the moment. I would certainly wouldn't touch it at this price, nowhere near this price, but congrats if you own this one because you got to be up crazy. What's the name of this? Yeah, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. By the way, this is a brokerage. It's where you buy stocks on, and full disclosure, it is an affiliate link. So if you deposit $100, we'll both get some free stocks. But yeah, UEC mainly just follows the momentum really of the uranium commodity. If you just go to ticker symbol URA, which is the Global X Uranium ETF, you can see it looks pretty identical to that stock right there. All the uranium players are doing really good because uranium is what powers nuclear reactors, and there's been a lot of executive orders stimulating nuclear reactors right now. Pretty cool. What is the site you're using? Yeah, hey, funny. Yeah, hey, if you're on the YouTube stream, it's in the link in the description if you want to get this site I'm on, or if you want to get this brokerage I'm on, it's in the link in the description of the YouTube stream. But if you're on TikTok, it's in the link tree in my bio. Let's see. And affiliate link, full disclosure, of course. SPC. Oh, I don't love SPC. I think that's I don't think we'll cover them. I think they're a couple hundred. Oh, Virgin Galactic, dude. This is that Richard Branson guy, bro. He made so much money, and then this is a dog of a stock. They pretty much, this is what this company wants to do. They want to send you to space for an hour. You can float around and then you can come back down. So yeah, they have no revenue, or pretty much, 400,000 of revenue a quarter. So they're doing 400,000 of revenue and they're losing 70 to 80 million in net income. When you're the whole entire company's worth 244 million. So imagine this, you buy the whole company for 244 million. You're buying a company that just lost 67 million, 84 million, 80 million. I could not trust real money in that name. I'd maybe momentum it. I got a bit of URA a couple weeks back. Yeah. Oh yeah. CRSD. Yo. Yeah. You're up great on that position. SEHD. Yeah. Hey, this is one of your dividend growth plays. Oh, hey, we got to look at AVXL. Hey, Ed, remind me to look at AVXL. Sorry, I didn't get to that one. I meant to get to that. But yeah, SEHD. This is like your dividend growth ETF. If we go to the dividend yield, it's kind of it's a good way to like diversify away from the tech heavy S&P 500, but this will not outperform the S&P 500 because it doesn't let its winners win. But you get a nice yield, a 3.88% dividend yield. And if we go to its holdings, I love AbbVie. AbbVie is the best number one holding for it. So as long as they keep AbbVie as the top holding, that's great. But yeah, they have a lot of the higher yielding plays. Like I actually love a lot of their I love a lot of their top names, like Coca-Cola, Chevron, Pepsi, Altria, Cisco, Merck, Amgen, Lockheed Martin. They got aerospace and defense name in here. So SCHD is a pretty decent ETF, but won't outperform the S&P 500. So AVXL, what's this one? So NVX Life Science. So a very small one, of a $740 million company. So the whole company is worth $740 million. Let's go see if, okay, so this is a startup. If we go to the revenue right now, it says 0 because they've never sold anything. So this is a startup. And yeah, so it says no data on revenue because they've never sold anything. And they're losing 10 million plus a quarter. So, when you lose 10 million a quarter, that money has to come from somewhere. So that's why the assets are, going down by 10 million a quarter. And luckily they can afford these net income losses. But yeah, we really want to see this company start to sell a product soon, or things could get in trouble here. So, yeah, I don't love the startups. Like they literally have no revenue. You're paying for so much future hopium. So let's look at GoPro. Yo, I don't even know if we want to look at GoPro. Yeah, what's the ticker symbol? Is it GPRO? What's the ticker symbol for GoPro? It is GPRO. Okay, cool. So here's the thing, they're just being out innovated by China. I mean, you can quite frankly get a better quality, and I was just looking for one. You can get a better quality GoPro or a better quality camera than GoPro that's Chinese made for much less of a price. But yeah, GoPro is pretty much going bankrupt, sadly. If they're only worth $330 million. So here's the thing. You're buying a company that's worth $330 million and they literally lose near $100 million a year. I mean, 16 mil, 46 mil, 40 mil, 9 mil. So they're losing nearly $100 million a year. And they've just done that for all of eternity. Wow, they lost $300 million that one quarter. That's more than the whole company's market cap. So I would not trust. And they lost all growth. I mean, look, this is what you don't want to see. I can totally understand why the stock has done so terrible. The sales are down 18% after they fell 22, after they fell 4. So the growth is gone. They're burning through net income. It's a tough one to trust, I think. Thoughts on rare earth? Yeah, hey, LAC, what's interesting is with the rising rare earth mineral tensions between us and China, yeah, basically right now China is tightening its rare earth export controls with new permits. So basically, yeah, China is kind of giving us power by allowing us to buy the rare earth stuff. So basically the government is now taking stakes into a lot of these rare earth mineral plays. Like the government took a 10% stake? Let me actually go back down here. Basically, I think the government took a 10% stake in this company. Government also took a 10% stake in MP Materials. Basically, the government cannot allow these companies to go bankrupt anymore. MP Materials, I don't know the whole deeds on Lithium Americas, but I know MP Materials is opening up this one rare earth mineral mine that'll supply certain rare earth minerals for the U.S. for literally the next 50 years, just for this one mine. So I think the momentum is definitely crazy right now. I probably wouldn't touch it here, but yeah, Pentagon announces $1 billion critical mineral stockpile expansion. Yeah, like the government's serious. I mean, especially because we're poking all these other countries on a stick with tariffs. We want to, we need to be more independent, like resource independent, manufacturing independent before we really threaten everyone, because we need everyone right now. So that's why the government's taking stakes. Pretty cool. Hopefully that was helpful. Yo, bro, Hood. Oh, hey, Lopez, we forgot to get to Hood. My bad there. Let's do it. So Robinhood stock, by the way, I do have a Robinhood portfolio. So I've probably given them a lot of transaction fees and stuff like that, payment for order flow revenue. They're up my portfolio is up 2.2% of the day, but Robinhood is up 1.2. Robinhood stock isn't just propped up on momentum right now like a lot of stocks. Hey, thanks C2C. I appreciate that. But yeah, Robinhood is so growthy. The growth of their numbers justify this insane stock price appreciation. If we go to the revenue, the sales, the lifeblood of the company, it's up 45% year over year. After it grew 40, after it grew 52. I mean, there's no red numbers. These year-over-year growth rates are insane. And so look at this. They did 989 mil of revenue. Out of this 989 mil of revenue, 390 million of it was after-tax net income. These brokerages have insane margins, 40% net margins, growing the margins every quarter. Everything here financially is headed in the right direction. They're beating on analyst expectations every quarter. They aren't just propped up on momentum. That being said, they're certainly overvalued. They're trading at like 60 times next year's projected net income. So I wouldn't buy it here, but they definitely go on the watch list. I do own them. They're my best performance stock. I'm up over 10x on Robinhood. But yeah, we can see their net cumulative funded accounts. There's 26.5 million right now versus 24.2. So they're a good one. Yeah, here, I'll show you that, by the way. Here's Robinhood's one of my biggest regrets as well. Robinhood, I regret every share I've ever sold. So I have 5 shares left. Look at this. I sold 50 shares at $36. Huge L's in the chat. Like, look at this. It made sense. Anyone in my position, it would have made sense if I explained it to someone. Like, look at this. We were buying shares at $9, $8, $11. We were buying the stock super cheap. And if we, again, actually, let me just give you the full context here. We were buying Robinhood shortly after they got, first off, I deserve the gains because I've been diamond handing this stock. I bought all my shares shortly after the IPO. And then we were just literally down on our position for years and years. And then finally, when I was up 3x, my average cost like 13 and we were up 36, I sold most of my position. And that was my biggest regret. So don't always sell don't trim your flowers and plant weeds is what they say or something. SoFi as well. SoFi is another one I regret every share I've ever sold off. But yeah, hey, but actually, here was my thesis for selling Hood at the time. It made sense. Again, I was down for the longest time, but here's what I can't believe. Robinhood stock likes to follow Bitcoin because most of Robinhood's net income comes from their crypto transaction fees. Not anymore because now it's prediction market, and Robinhood Gold. But the day Bitcoin hit $100,000, Robinhood rallied up to $36. And I'm like, this is what I said in my head. I said, I don't think Bitcoin's going to go much higher than 100,000, like in the short term. And that what was propping up Robinhood stock. So I'm like, let me just sell most of my Robinhood. But Robinhood since then has gone from 36 to 140. Let me stop talking about Robinhood. Okay. Someone said I'm up 20x on Robinhood. Oh my goodness, Potato. You're doing great. So Michael said, can you please do EADSF? Unfortunately, we can't find that one. It looks like that's Airbus stock. Like I see some articles about it, but I actually can't view it on this exchange or this app. Must be on a weird exchange. That's unfortunate, Michael. I wish I could give you thoughts on them. That rarely happens. Hey, what up, Kadeem? What up, dude? He said QUBT. Hey, this is I've looked at all the quantum stocks out there. This is unfortunately one of the worst quantum stocks, but it's not worse as in it's still done insanely well. So first off, if you're in this stock, you must be doing amazing on it. But here's why out of all the quantum names, this one's one of my least favorite because of their numbers. We go to their revenue down here. I mean, this is why I don't love it. I mean, the revenue was 60,000 this quarter. It actually fell 66% from the previous year. So the revenue is only 60,000 and it fell 66%. They're losing 10 mil a quarter. What are analysts expecting? So yeah, they did 60,000 in revenue. There's not much growth expected. Revenue is supposed to go to 190. So for the fact that they're doing like 100,000 a quarter of revenue, and this whole entire market cap is 4.77 billion. I think it's not, the risk reward doesn't look great buying them. Hopefully that made sense. That's my financial point of view. The momentum will probably continue anyway, and you'll still do amazing. So kind of forget what I'm saying there. But those financials, it makes me hard to trust it with a meaningful amount. I like buying companies that are momentum-y, but also have great fundamentals, like Powell Industries. Like the momentum on this one's insane. Or like a Comfort Systems, which I think is at a new all-time high today. It hit a new all-time high. It's not closed at an all-time high, but it is at an all-time high today. All right, we'll look at a few more stocks here. Then I got to go, sadly. But by the way, if y'all wanted to follow on, we stream every day at this exact same time. We stream every day. I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. Someone said check pizza. Wait, who said that? The name's hidden. Kiru, Kiru said pizza stock. So yeah, Papa John's Pizza. Actually, we ordered Papa John's Pizza 2 days ago. Actually, a brand new Papa John's location opened up right next to our house. So that's interesting. But Papa John's Pizza is struggling hard, down 10%. What app using? Hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. By the way, this is a brokerage, but it's where you buy stocks on. But yeah, let's go look at their numbers right here. And again, it's not just pizza, or the ticker symbol is pizza, but it's not just Papa John's struggling, it's the whole industry. If we look at the sales, sales are up 4%. That's actually good. Revenue's up 4%. But if we go to the net income right here, these declines aren't great. The profits, so basically the margins are collapsing over here. 1% net margins. Wow. 1 to 2% net margin. So it's not the end of the balance sheet isn't great. You get a 4% dividend. I don't love that you get that high of a dividend. I would rather buy Domino's Pizza. Oh yeah, they get their franchise royalties. How's that doing? Franchise royalties. This is their high margin stream of income, which I do like. Like if you go spend $100 at any Papa John's Pizza, I think like $4 or $5 of it goes back to this stock. Oh, Closing Cross. Market closes in 10 minutes. Let's go. All Closing Cross is it just combines. That's why there's so much volume at the first and last 10 minutes of the day. It just combines all the orders together. Wow, the time has flown by. Market's about to close. Yeah, we've been streaming for over 2 hours and 10 minutes. I appreciate y'all. Can you do Procter and Gamble? Yeah, let's do Procter and Gamble. Oh yeah, wait, actually, real quick. Speaking of Papa John's Pizza, like look at all the other restaurants. Like look at Wendy's. Oh, yo, RIP Wendy's. I wouldn't buy the dip on them either. And again, it's not just Wendy's. You look at Jack in the Box, which is another. If anyone, when was the last time you've been to a Jack in the Box? It's been over a decade for me. But yeah, that stock's at an all-time low, sadly. Krispy Kreme donut is at an all-time low as well. So it's not just Papa John's Pizza experiencing that. Like even Chipotle. Chipotle's not immune either. Chipotle, huge gap down on the earnings. So a lot of the restaurant stocks are struggling. And my way of betting in that industry is buying McDonald's. Actually, McDonald's or Yum Brands. Those are the two you want. Either McDonald's or Yum Brands because of their real royalty franchise model that's recession resilient and their real estate model. But yeah, Yum Brands, if you didn't know, this stock owns a KFC and Taco Bell. Oh, and Pizza Hut. Hey, so this is almost like a more diversified way to get exposure to Papa John's Pizza because you get exposure to Pizza Hut and Taco Bell and KFC. And I like all those restaurants. And you get a 2% dividend yield, sustainable 2% dividend yield. So actually, Yum Brands used to be owned by Pepsi. That's why whenever you go into a KFC or a Taco Bell, you only see Pepsi products like Mountain Dews because they have a lifetime contract with Pepsi to only serve Pepsi products because the two restaurants used to actually be owned by Pepsi. Pretty cool fun fact there. So, hey, what up, Kawara? And thoughts on what app you're using and from Africa? Hey, I actually unfortunately don't think this app is available in Africa. But if you do want it, by the way, this is a because this is a brokerage. It's not just like an app. This is a brokerage where you buy stocks on. I know it's not available in EU and some other countries, but yeah, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. But yeah, this is my favorite brokerage, lowest fee, no commissions. And it has a lot of cool features. Like you can do the super investor portfolio tracker. Like you can see the Nancy Pelosi portfolio. These are super investors. They have to make all their trades public by SEC law. So you can see all their holdings and their weightings, and you can now even follow them into it. You can follow what they do. Buffett's portfolio and Nvidia portfolio. But anyway, I'm at the South Pole fishing station. Is it available there? I think it's available as long as you're like a citizen of, or like yeah. What's the, yeah, hey, by the way, if you want to get this app I'm on, by the way, it's a brokerage. It's in the link tree in my bio, the very first link there. Another really cool feature I'll just show really quickly. If you're looking for new stocks, if you go to the markets tab up here, you can see their investment themes. And this is where I find out a lot of new stocks. You can learn, you can see the Nancy Pelosi portfolio, nuclear power. I mean, there's so many different watches. This is where I like to discover a lot of new stocks. So you can learn about all these fine stocks in there. But another cool thing, if you scroll down here, you can see the interest rate cut probability. So like I think you get all the S&P global data, which is pretty cool. So you can see on October 29th meeting, 99% chance of a 25 basis point cut. December 10th meeting, 95% chance of another 50 basis point cut. Oh yeah, you get all the the actual like data for the economic data. So anyway, yeah. Hey, by the way, yeah, if you want to get this app I'm on, it's in the link tree in my bio. The first link there, brokerage. Okay, so what's up, Steve? What's us called block? I don't know. Just got back from work, watching your live. Hey, what up, Ant? Hope you're having a great Monday, dude. What's up, man? Did you pull out any crypto during the crash? I actually don't own any crypto, so I guess no. Let's see here. Can you check out EADSY? What is that one again? Oh, Airbus. Okay, we can find the ticker symbol, so check that out. This stock is at an all-time high. That's actually really impressive. So congrats if you own this name. What do they do? So Airbus, so basically an airplane. So most of the revenue is outside the US, 40% EU, 25% Asia Pacific, and then North America is 23%. So it's like an international airline play. And honestly, those are probably the best airlines out there. The best airlines are not in the US. They make really good net income. That's better net income than Delta Airlines. And Delta Airlines is the most well-run airline. So out of all the airlines, this is the very best. Pretty cool. Is it called Blossom? No, this is not Blossom. I do have Blossom though. I don't love Blossom. Blossom is just full of covered call promoters. But okay, let's see. Can you go over Proctor and Gamble? Yeah, I forgot to get to that one. That was my bad here. This is a great dividend stock to buy and never sell. So check this out right here. They own a lot of like billion-dollar brands that you've heard of before, like a Tide, Gillette, Old Spice. I mean, just like your consumer staple stuff. So yeah, here's where the revenue comes from. 35% home and fabric care, 25% baby feminine care products, beauty products, healthcare products. So I love how diversified the revenue streams are, and they print net income. I mean, look at this. They're easily making 3 to 4 billion of net income every quarter. You get a 2.76% dividend yield. They raise the dividend every year. Pretty good. Is it Mumu? I can't find it. Yeah, hey, you can't find it. Yeah, hey, by the way, this is a brokerage. It's in the link tree in my bio, the very first link if you want to get this app I'm on. It is called Mumu. Yeah, you can just type it into Google. It's called Mumu, but you can't find it like on. By the way, it's an affiliate link too, full disclosure. I like saying that. If you go and deposit $100, we'll both get some free stocks. All right, we'll look at a few more stocks, and then I got to go. All right, let's see. Oh yeah, the Honest Company. I forgot to get to that one. So this is it's kind of like a super small version of Procter and Gamble. They sell diapers, wipes, beauty, healthcare products, all that kind of stuff. But this is one I wouldn't touch because they're so slow growth, or pretty much no growth. Would you say Mumu is better than Robinhood? I would say that, Kadeem. And I do have Robinhood as well. I have all these brokerages. I have Robinhood, I have a Webull brokerage, and I have Mumu. By the way, all these brokerages I use, they're all linked in the link tree in my bio. It doesn't matter which app you buy stocks on. Like you can buy stocks on any app and they all work the same. But I like this brokerage specifically because it has the lowest fees and all the actual useful analysis tools. So yeah, if you want to get this brokerage, first link in the link tree in my bio. And there's no burden of having multiple brokerages. But here's the Honest Company. Here's why, to be honest, I don't love them. If we go to the revenue, the sales, the revenue is only up by 0.44%. Like that's not great growth. That doesn't really beat inflation. The revenue is only up by 0.4. But I do like that they're making net income, 3 million. That's important when you're a $400 million company. Like this whole company is only worth 413 million. But I really would like to see more growth than just 0.5% growth. All right. Hey, what up, Rap? He said ASX. Let's just see if we can find this one. Okay, here we go. ASE Technology. Well, hey, look at that. They're at an all-time high. So, yo, congrats if you own this one. You're probably up on your position big time. They're up 6% on the day. Let's see what they do. So they're a packaging business, huh? 15% of the revenue comes from Taiwan, but most of it from the US. So packaging. And they're also in electronic manufacturing service and then testing. Ooh, where's my water? Oh, here's my water. All right, got my Celsius. So yeah, the testing revenue, actually, that's cool. That's a lot of money, 568 mil. It's up 46% year over year. And you get a nice yield. So wow. Not only do you get the nice stock price appreciation, but you get a 3% plus dividend with this company. And they traded a fair multiple, 23 times PE, 23 times net income, probably because they're in packaging, like a boring commodity business. But yeah, look at that. They're easily making 200 to 300 million of net income a quarter. Let's go see how much the dividend cost. So they made 260 million in net income. And the dividend cost, oh, it's not going to show us. Well, that's weird. Oh, well. Yeah, and get a nice 3% yield with them. Airbus creates planes, by the way, like Boeing. Oh, so it's not an actual airline. That makes more sense, Michael. Thanks for that. Opinion on Eli Lilly. Actually, I love Eli Lilly as a healthcare play. It's too early to drink. This is a Celsius. This is an energy drink. Yeah, definitely too early for. Okay, but here's Eli Lilly. This is one of my favorite healthcare plays out there. Let's see. There's some technical analysis, and that they're saying that this has a rise probability of an 88% chance. So hey, hopefully that works out. But I love looking at the numbers, the financials of a company. That's where, that a lot of other TikTokers, they just go over like technical analysis and charts, but I like looking at the numbers because usually in the long run, we're actually always numbers outshine in the long run. It explains why Lucid's at all-time lows and Palantir's at all-time highs. Or at 90% of the time, sometimes you'll see a stock trade just insane off reality, like Oklo or something, some of the quantum names. But check this out. Back to Eli Lilly. They sell a bunch of different prescriptions, like Mounjaro, for example. This is their main prescription, and it is so growthy. I can't believe it. They created it in 2022. It was $16 million in revenue, and ever since then, it just hits a new record every year. It's $3.8 billion, up double from the previous year. So that's just one prescription at a new record, growing insanely. Now they have this new product. This is their weight loss prescription competitor to Ozempic. So this is their weight loss prescription called Zepbound. They literally created this in 2023. It was 170 mil of sales. Now it's 2.3 billion. Like in this short amount of time, they literally can just create these prescriptions out of nowhere and they just sell. And it's now 20% of their entire business. And they have all these other ones too, like click on Jardiance. That's up 47% after going 18. So they sell a bunch of different prescriptions. They're really growthy. Like I love them first and foremost because they're just growthy. And they're getting into, you get exposure to the weight loss prescriptions. And the Zepbound is a real competitor to Ozempic. So yeah, the revenue's up 37 and the profits are up by 61. They're easily making 5 to 7 billion in net income, or pretty much 5 billion plus in net income a quarter. Insane. So Looney said AMG, and Amgen, I think this was a spinoff from AbbVie a really long time ago, or Abbott Laboratories maybe. I forget. I think it's Abbott Lab. But let's see the yield here. I think it's a medical device company. Yeah, you get a 3.2% dividend yield. Hey, not too shabby, 3% yield. So it looks like they're another one. They sell a bunch of prescriptions like Prolia. That's actually down 3% year over year. What about this one? Repatha. That one's up 30% after going 25. That's seeing some nice growth. Ostella. So they're not seeing as much growth as Eli Lilly is, but it's like a smaller version of Eli Lilly that's still done really good. It's kind of flat on the 1 year, but still. Let's see the net income. Saying I'm AFK. Oh my goodness. As soon as I hit the 2 hour and 30-minute mark on TikTok live streaming, they make me fill out a CAPTCHA because they think I'm AFK. But look at this net income right here. They're printing money easily if you average it out over $1 billion in net income every quarter. And they just share that with you. The total revenue, it's good. I like AbbVie too. ABBV is a really good one as well. All right. We'll look at one or two more here. Kevin said HL stock. What's this one? This is Hecla Mining. This must be a gold stock or maybe uranium. Let's see. Other precious metal, or just a rare earth precious metal play, because a lot of the precious metal stocks have been going nuts, like MP Materials, LAC, because the U.S. really wants to protect these assets. Yeah, these are all the mines that they own, like Greens Creek. Net income. Yeah, look at that record net income, 60 mil of after-tax net income. That's great. So it should probably just follow the commodity of gold. I think that's a gold play. What's the ticker? Hey, Nebex. I forget what stock we were talking about there for ticker symbol. By the way, if you missed anything, I'm streaming on YouTube and you're able to rewind it. By the way, the number one way to support me, because I sell nothing. I have no course book, WhatsApp, Telegram. I'll never follow you, DM you. The best way to support me, this would mean more than donating $1. But if you just subscribe to my YouTube channel, it's called Nathan Roberts, also in the link tree in my bio. But yeah, I'm trying to build up my followers on YouTube. I'm streaming on there as well. You can replay it, rewind it, whatever. Sometimes I talk too fast and I apologize. So someone said Nebius, extra mad. What up, dude? Speaking of Nebius stock, actually, that company is in the Nvidia portfolio. And then we can maybe get to John Deere and Cat. Cat, CAT, did some like merger today. Oh, hey, what up, Sir Mort? How's it going, man? And, ooh, MA stock. Yo, I love MasterCard. So if we go to the Nvidia portfolio right here, one of the stocks they own is actually Nebius. It's 3.85% of Nvidia's portfolio. And again, I wouldn't just buy a stock because Nvidia owns it. Always do your own research on it. And this one, there's so much good momentum. I mean, Nebius secured a $17.5 billion Microsoft Azure cloud deal. So Microsoft cloud servers are going to be with Nebius, or some of them, of course, which is pretty cool. And this is just a pure growth play. I mean, if we go to the revenue, the sales, it went from 14 mil to 100 mil. So it was 100 million this quarter, a record. They're expecting 250 million in 2 quarters. Hey, watch out for that guy in chat there. Hold on. Let me report that. All right. So yeah, watch out for people impersonating me. I'll never follow you, DM you. I sell nothing, of course. Okay. CAT stock. Yeah. So this company was, I think, going through some merger today. Let me click on news tab here. I remember there was some sort of news. Maybe I'm wrong. Oh, yeah, wait. Oh, Caterpillar to acquire RPM Global. Pretty cool. Strengthening its mining technology portfolio. Pretty interesting. I'm a fan of, even though the stock is at an all-time high, if I was a shareholder, I wouldn't be selling. This is a phenomenal dividend growth company. If we go to the dividend, you get a 1.1% dividend. They raise the dividend every year at a good rate. They're trading at 25 times PE. The PE is just the net income multiple. Compared to the industry average, it's very good. Energy transportation needs their stuff. Construction needs their heavy machinery. Resource industries need it. So yeah, they're printing, good net income every quarter. Well, let's see what the Morningstar research is. What are the bulls saying? Management may be understanding. Well, actually, I don't want to read all that. Anyway, that's kind of cool. You can read what the bulls say and bears say. Datadog. Hey, Datadog just got added to the S&P. Matt said whatever. Oh yeah, hey Matt, if you want to get this app, or this is a brokerage, by the way, where you buy stocks on. If you want to get this software I'm on, it's in the link tree in my bio. First link there. Full disclosure, it is an affiliate link, so if you go and deposit $100, we'll both get some free stocks. But yeah, lowest fee brokerage, my favorite platform to buy stocks on. Hey George, what up, dude? He said PL, please. Let's do it. Planet Labs. I think this might be another rare earth mineral play. Let's go double verify that. So, or maybe not. Let me actually check this. Aerospace and defense. Okay, so this is an aerospace and defense play. Let's see. Whoa. Okay, first off, huge beat on analyst expectations. The orange line is what analysts expect. They expected 66 million. Well, they reported 73 million, and last quarter was a huge beat as well. And they beat on EPS, which is net income. So it was basically triple beat quarter. And the aerospace and defense industry is on fire right now. All the aerospace and defense names are doing great. So, hey, that one's pretty interesting. Hey, FVDE. Hey, thanks for the roast there. He says, digging this live. Hey, I appreciate you, my friend. I'm actually about to end the live stream, sadly. So, by the way, if you wanted the follow button, we stream every day at the same time. We just stream every day. We just look at stocks and stuff. What about VG and how about fundamentals? Wait, isn't VG just the Vanguard? This is Venture Global. Yeah, let's check it out. Yikes, they had a nasty decline yesterday. They gapped down. I wonder if there's any specific news. Actually, let me go to, nope. All right, well, let's just go over here. So, what is that? I'm not even going to try and pronounce that. The Plaque Mines project, the Calsahiu project. So, I wonder what industry this is in. Oil and gas midstream. So, construction of liquefied natural gas production. So pseudo oil and gas play, I'm guessing. They're making good net income. It looks like 500 million to $1 billion a quarter. I just don't understand it too much. Don't invest in what you can't understand, but they're interesting. I don't know. Some sort of oil and gas development company. Critical LNG to the world. Projects include... Okay, so some sort of oil and gas pipeline project or something. Anyway. Thoughts on LAC? Oh, yeah. Hey, LAC. Oh, and Rich Tech Robotics. See you, Nathan. Great as always. Hey, Charles. I didn't even know you were here. Hope you have a great rest of your Monday, my friend. I'll see you next time. I'm also about to get off the stream here. Probably look at 2 more stocks. Oh, in the ASTS Space Mobile. So this is your lithium. This is your another rare earth play. This is a lithium one specifically. Basically, the U.S. government just took a 10% stake because right now China is kind of threatening us. China tightens rare earth export controls with new permitting requirements. So it's harder for us to get the rare earth minerals. And we need those. So the U.S. is trying to be more rare earth mineral independent by taking stakes into MP materials, Lithium America. So it's cool. Basically, the government can't allow these companies to go bankrupt as like a national security risk. Like the Pentagon is helping them. So I probably wouldn't buy I wouldn't buy it here. But yeah. Hey, thanks for that, Turk. Someone said fake accounts trying to be you, sending me follow requests. Yeah, hey, please watch out for people impersonating me. I'll never follow you. I'll never DM you, and I just don't sell anything. So I'll never DM you about anything. I don't sell a course book, WhatsApp. I don't private, nothing like that. So ASTS, what up, Solomon? So yeah, ASTS based mobile. The thing is, do ET, please. Yo, hey, that's an MLP, Will. Maybe we'll check out MLP or that ET right there. Yeah, we'll check that one out. That one gives you a K1 tax form, so do beware of that. But ASTS Space Mobile, this is a huge momentum space stock, and they're really pricing in the future growth that's about to happen. Because if we go look at their numbers right now, the numbers are awful. $1 million a quarter, 700,000 last quarter. But look at what the analysts are expecting next quarter. The revenue was 1 million this quarter, but analysts are expecting 22 mil, then 35 mil the next 2 quarters. So that you're really waiting the next 6 months for that volatility. So yeah. Can you look up a company, Daybreak? I'll type it in. If you have to give me the ticker symbol. Yeah, I can't find that one. Maybe is it one word? Yeah, I can't find Daybreak stock. So Looney said, "Did you DM me on Discord?" No, I don't think so. Maybe. If it's not from just shaping. What was Fast Earnings? FAST. Let's see. This is Fastenal. Oh, yeah, they sell like fasteners or something. Oh, yeah, we could look at Target. Oh, we got to get to ET as well. Hey, what up, big man? So Fastenal right here. They sell, fasteners, safety supplies, janitorial supplies. How's that doing? Hey, that's up 12% year over year. That's interesting. Let's go to net income right here. So, yeah, look at that. They're making $300 million in net income a quarter. It's a very niche stock. And you get a 2% dividend. They've had some insane stock price. They're obviously gapped down yesterday, but they had some nice stock price appreciation. Let's go look at their earnings. Let's see what they did. So they met on revenue, they missed on net income, and they missed on EBITDA as well. So it's kind of I can understand why they gapped down. It did not meet what the analysts were expecting. So, but still, they make great net income. $300 million a quarter and a really great balance sheet. So. Any potential in Beyond Meat? Nope, no potential there. Please stay away from that one. I bet you Beyond Meat will probably just continue to slowly go to newer all-time lows. While having some little volatile stuff. So someone said ET right here. Yeah, so by the way, this is an MLP. This actually isn't even a stock. When you buy this, you're actually buying units, because you're actually a partner in the company, because they actually give you, this is an MLP, which stands for Master Limited Partnership, and they actually give you a K1 tax form at the end of the year, which are notoriously hard to figure out or fill out. So do be like, my first year investing, I accidentally bought an MLP and it costed me $300 with an accountant. So, two K1s, so it wasn't great. But because they're an MLP, these MLPs have rules where they actually have to pay out most of their income in the form of a dividend. So you basically buy this to maximize your income, 7.8% dividend yield. Now, here's a way you can get exposure to this without the K1 tax form. You can buy a MLP, which literally is an ETF of all the MLPs, and it doesn't give you a K1 tax form. Energy Transfer, look at that. ET, the stock we were just talking about, is 12% of all this ETF. So you put $100 in here, $12 of it goes to this, and you still get a nice yield, 8.5% dividend yield. Oh, well, hey, what up, CAS? Yeah, Beyond Meat, I feel bad, so. And, I forgot to get to MasterCard. So there's MasterCard, Visa. Basically, those two companies, MasterCard and Visa, have a shared oligopoly on the, payment processors, credit cards, all those small little micro credit card transaction fees that are slowly bankrupting us are making MasterCard and Visa a lot of money. Oh, we got to get to Target after this. Yeah, Target is not a buy. And I'll share with you why, I think. But MasterCard makes insane net income, easily $3 to $3.5 billion in net income a quarter. What is MasterCard doing with all this net income? Well, first off, they have a dividend, so you get that 0.5% dividend, and look how fast they raise the dividend every year. So first off, it's nice that you get a 0.5% dividend yield, but they're making $3.5 billion of net income a quarter. The dividend only cost exactly $691 million. So what are they doing with all their leftover net income? buybacks. I can't believe it. They're doing 3 billion nearly of share buybacks a quarter. And what does share buybacks do for you? Well, check this out. The net income grew by 13. So the net income's up by 13, but the net income per share is up by 16.3 because the share part of the ratio went down. Remember, EPS growth and net income growth should always be the exact same, but the only thing that changes this is if there's more or less shares that exist. And there's less shares that exist. And when there's less shares that exist, it literally gives you more ownership in the company because there's less shares that exist. Net income is spread out through less shares. So it gives you more ownership, basically more net income per share, which makes the EPS go up and it makes the PE ratio go down. It basically forces the stock price to go up whenever they buy back shares. So I love buyback friendly companies. So Target, the thing is, this might be the last one we do. Maybe. So here's Target right here. This is pretty much a dividend play. You buy this to maximize your dividend income because the yield is sustainable. You get a 5% dividend, but I just don't love this stock. I'm probably about to say some bad stuff. So here's my hunch on why they're underperforming all the other grocery stores. If you look at Walmart, you look at Costco, those stocks are doing amazing. Why is Target doing terrible? Because they're not a grocery store. They sell more discretionary items. Only 22% of the revenue is basically groceries. A lot of their revenue is household essentials, apparel stuff. Home furniture and decorations is 15% of all their sales. Beauty products. People aren't just going to Target to buy groceries, and that's why they're being hurt more because they're more discretionary. And if we just go to the revenue right here, the lifeblood of the company, the sales, this is what's rough. The revenue year over year is down by 0.95%. So the revenue is already down by 1%. And the net income is down by 21, which means the margins are falling. It's already a low margin industry, 3 to 4% net margin industry. Margins just fell. They're kind of being out innovated as well. Like anything you can get at Target, anything you can get at Target, you can get on Amazon and Walmart. And Amazon and Walmart actually deliver the stuff to you. I don't think Target has an online presence. So kind of for all those reasons, I think Target is just struggling. Sales are negative. Kind of just being out innovated. So you're buying them for the income. Hopefully that was helpful though. I didn't mean to be mega bear on that stock, but that's kind of where I was coming from. So, okay, Klarna. Yeah, hey, thanks again, CAS, for the roses there. I kind of like Affirm better. This is a buy now, pay later stock. So if you're looking for exposure to buy now, pay laters, which I don't love, honestly, if we go into a recession, which we might, actually we might not, but these get smoked. Like people just won't pay back these loans. So Klarna is one of the buy now, pay later stocks. They're not profitable yet. I like AFRM, Affirm, as an actual profitable, more growthy buy now, pay later stock. So yeah, here's Affirm right here. If we go to their net income, they actually just started making net income the past 3 quarters. So yeah, hey, that was the stream. Hey, Isaiah, no way. I'm so sorry, man. I'm ending the stream right here, but hey, see you later, Charles. Why can't we see the letters on the chart where we will know which company you're looking at? You can see it. Yo, wait. Jeff Mack, I can see the stream on my YouTube studio thing, and I'm able to see the ticker. So I think if you hold down on the display, you can hit like clear display, and it'll like hide all the chat on the screen. Hey, see you all later. Dang, live back tomorrow. What time? Yeah, hey, by the way, yeah, we stream every single day this exact same time. By the way, if you want to hit the follow button, we stream every day. And I sell nothing. I have no course book, WhatsApp, Telegram. I'll never follow you. I'll never DM you. But the best way to support me is to subscribe to my YouTube channel. Hey, Isaiah with the hat and mustache. No way. Thanks so much, dude. I really appreciate that. You know what, Isaiah, since for the super nice dono, I got you. He said BYRN. I'll kind of still do my outro here, but yeah, if you want to hit the follow button, we stream every day this exact same time, and I'm streaming on YouTube as well. So if you missed anything and want to replay it, you can do it on the YouTube stream. Tony said, what's the app? Yeah, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. By the way, this is a brokerage where you get stocks on. So if you are interested in stocks and want to buy stocks, you need a brokerage to do it on. And well, I have all these brokerages right here. Any brokerage works. I got Robinhood and I got Webull, but the most useful one and lowest fee brokerage that costs nothing, no commissions, no monthly fees or anything, is my favorite one is this one right here. It's in the link tree in my bio, the very first link there. And full disclosure, it is an affiliate link. So if you go and deposit $100, I'll both get some free stocks. But let's look at BYRN. And then, then we'll end the stream here. What is Fix? Yeah, Fix is an HVAC play. So here is Bryna Technologies. Great time. Hey, see ya. I gate this loony Prince. Hey, what up, Prince? Boy, how's it going, man? Is Sean, Michael, Anthony, other Michael, sir. See you all tomorrow. So let's analyze this stock really quickly. Thanks again. Shout out to Isaiah for the gifts there, for the huge gift there. I really do appreciate that. I hope everyone's having a great Monday, by the way. So yeah, check this out. This is the good thing I love about this stock. Wow. The revenue is up 35% after it grew 194. So they're on a growth streak, and look at this balance sheet. I mean, this is incredible. They actually have no debt. Or this is just a really good balance sheet. I'm guessing they have no net debt, no dividend, but they shouldn't pay a dividend. Let's see, analysts are expecting revenue of 35 mil next quarter. Yeah, the year-over-year comps are going to look amazing. The growth is expected to continue here. Let's see free cash flow and net income. So, oh my goodness. So look at this. Not only did they do 28 million of revenue, I was not expecting them to be net income positive. That's insane. They're doing like 2 million net income a quarter. Wait, hold on here. What's the market cap? So here's what's so cool. So you're buying a company worth 550 million. So it's a $550 million company with a really good balance sheet. Looks like no debt at all or no net debt. A $500 million company with no debt that's making a couple mil a quarter. 2 mil. They're net income positive every quarter. So it's a profitable company and it's growing. Sales are up 35% and the revenue is expected to continue to grow. So actually, hey, Isaiah, I actually like this one. So heck yeah. It's a small one, only worth 550 million, but out of all the $550 million market caps out there, that one looks really interesting. So anyway, yeah, Isaiah, see you guys later. Have a great rest of your day. Again, if you missed anything and want to replay it, so it's really fun if you watch the beginning of the stream on YouTube. I'm streaming on YouTube. My YouTube channel is called Nathan Robert. You can just type into YouTube Nathan Robert. It's also in the link tree in my bio. But yeah, see you guys later. Have a great rest of your day. Hey, shout out to everyone on the YouTube stream. Y'all are the best. TikTok, whenever I mention go subscribe to my YouTube channel, TikTok will take down my stream and remove my For You page eligibility for promoting or for directing people off the platform. So anyway, for y'all on the YouTube stream, y'all are the real ones. Hey, before you go, if you are still here, hit the like. If you haven't already, hit the like on the stream. It still really helps out, even though the stream's going to be ended. But hey, hit the like button to help me out.